workers. And so I don't think it's that unrealistic or unreasonable to hang on to the workers you've got for dear life.
Where are we in terms of productivity here? I was amazed when the pandemic hit and shut down and lockdowns and all that kind of stuff, that people were still able to do their jobs pretty much from remotely, and it's just kind of amazed me. Where are we in the productivity discussion?
So, that productivity data series is a weird one. It shot up during the pandemic when there were massive layoffs, and those layoffs are typically concentrated among employees who are not, day-to-day involved in generating widgets. Then measured productivity tumbled as all of those support staff, the HR people, the marketing people came back. Then it started ticking up from a point above the pre-pandemic trend. And so it does look as though the investments that happened during the pandemic in a zero interest rate environment, when everyone was shifting to computers, to doing everything on the internet, to digitalizing every industry, those investments have actually improved productivity, and we're seeing great productivity numbers continue now.
Really I feel more productive. Don't I look more productive?
Well, I mean, you are literally standing in this position for 5 hours.
Exactly.
So just from that alone, yes, the answer is yes. All right, Julia, thanks a lot. We really appreciate it. Julia Pollack, she joins us from ZipRecruiter. She is the chief economist. I do think, though, that longer term, the labor shortage in different industries is going to be really hard, and I don't know what the longer term fix that is. You have to convince kids to go to trade school.
That's exactly what I was going to say. Create the incentives for the folks to go to trade schools, because, and we hear it, and we heard it just recently from George Ferguson talking about his industry, the aerospace industry. One of the reasons Boeing and the FAA are having a hard time kind of getting their act together is they lost a lot of workers in the pandemic, and these aren't just people that hammer nails. These are people that do pretty specialized, jobs there, and you got to get them back. You got to retrain them. It's taking harder. I didn't think that would still be an issue, but it is, and we're here from industry after industry. Your industry in the energy space.
You have to wonder, like, at some point, does that wind up becoming longer-term inflationary?
Yeah, absolutely. I mean, a lot of folks are saying forego college, forego the debt that's associated with the college. Go to a trade school, a lot of which can be subsidized and supported. Man, you can make good living in a lot of these industries out there. So we'll have to see how that plays out. But good, we'll see the jobs numbers tomorrow. We'll get a lot more info on the United States labor market. And of course, Bloomberg will have full coverage on that, because that's what we do. Right now, let's head down to Washington, D.C. We'll get world and national news with Amy Mars.
All right, thank you, Paul. Plans have been approved for strikes against targets, including Iranian facilities inside Iraq and Syria, CBS News citing U.S. officials. Those strikes will come in response to drone and rocket attacks targeting U.S. forces. President Biden is expected to issue an executive order today that would punish settlers in the West Bank who have been attacking Palestinians in the occupied territory. That's expected to include sanctions against those settlers. And negotiations are advancing for an agreement to pause the Israel-Hamas war and free civilian hostages captured by Hamas. Sources tell Bloomberg conversations are still in the early stages, and a breakthrough isn't expected in the coming days. European Union leaders striking a deal on a financial aid package for Ukraine after a nearly 2-month delay. Ukraine says it's running out of artillery. A rare bipartisan vote in the House, which has passed a $78 billion business and child tax break bill. But it took some doing, as we learned from Bloomberg government reporter Jack Fitzpatrick.
It's probably a big enough number, 357 votes in the House, to give it a bit of momentum in the Senate, where there still has been some skepticism, but a very impressive House vote, I think, may give it some momentum heading into the Senate.
Where Majority Leader Chuck Schumer says they are working on a deal.
I support the tax bill, as I've stated before. I'm working with Senator Wyden to figure out the best way forward.
The White House has said he will sign the measure if it can pass the Senate. A new poll from the Associated Press Nork Center for Public Affairs Research finds that 35% of U.S. adults call the national economy good. Now, that's an uptick from 30% late last year, but the numbers don't seem to be helping President Biden as he runs for re-election, in part on the economy. His overall rating remains around 38%. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg newsroom, with this Bloomberg Business Flash. Following the market's worst two-day decline since October, the major average is higher. Investors waiting for earnings reports from three mega-cap tech companies, Apple, Amazon, Meta Platforms, and that comes after the close of regular trading today. On the economic front, jobless claims data ahead of the jobs report tomorrow, showing the number of Americans applying for unemployment at the end of January rose to a nearly 3-month high, so I'm going to call that Fed-friendly. And after Fed Chair Powell kind of poo-pooed the idea of a March rate cut, Kamal Sri Kumar Global Strategies suggests the Federal Reserve is being a little erratic.
What happened between December 13th and yesterday to cause a big change to hawkishness? Nothing. If anything, inflation numbers came out more benign than expected. So this is what is the problem with not having a long-term view on the part of the Fed.
And right now, the Dow Jones Industrial Average up 137 points. That's up 0.4%. The S&P 500, 28 points higher. That's up 0.6%. 48.73 on the index. And the NASDAQ 100, 120 points higher right now. That is up 0.7%. Now we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. My new favorite cookie, whatever cookie that is from Florence, Italy.
That's the new
Well, I
one.
don't know
That is-
because it's written in Italian, but there's some amaretto thingy with some powdered sugar.
No.
This is what I got for
How can
It's
you.
you go
really
wrong?
light. It's just like perfect. It's
Just
not a
melts in your
heavy-
mouth.
Oh.
So it knocks off Oreo from your number one list? Okay.
Well, ever since Oreo stopped
Thin
putting
mints.
enough of the the cream
Yep.
in there, they just kind of skimped on that.
They skipped on the
Yeah,
cream?
because it's gross.
No, well, that cookie beats
great American-
Oreo,
great
so
American
I gotta go. So.
All right, John Tucker, thank you so much. We appreciate it. Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. We talk a lot about the tech companies reporting, but we got like some real companies reporting, real manufacturing, American global manufacturing companies reporting. One of them is Honeywell International. I think the numbers are okay, but the guidance is probably a little bit light here. Let's check in with somebody who does this industrial stuff. She's been doing it for decades on Wall Street, one of the top analysts out there, one of the absolute first analysts that we had at Bloomberg Intelligence, so it's good stuff. Karen Ubelhart joins us, Bloomberg Intelligence. So, Karen, I know you got a ton of companies reporting today, and let's just talk about Honeywell, and then let us know what else we need to be aware of.
Honeywell, some of the margins were disappointing, and the organic growth was light.
Now they
So-
make what are their key product areas?
Aerospace.
Aerospace.
is the
That's
biggest,
it.
but they also make chemicals, they make warehouse automation, they home building. I mean,
97,000
building,
employees
a lot of
based in
different
Charlotte,
things.
North Carolina. They make all that.
They do a lot of
stuff.
energy transition stuff
Yes,
too,
yes.
in buildings.
That's
Okay.
in the
So, yeah.
chemical
So
business.
sorry to interrupt. So their numbers were okay.
Well, I'd say disappointing on an organic growth basis in 3 out of the 4 businesses, and margins weren't that great either. And Honeywell always sets a bar and beats a little. Sets a bar and beats a little. This time they didn't, and they were a little short on organic growth, and they just met EPS. And as you said, guidance was
Okay. Yep.
So
So the
they
stock
needed
is getting
more.
hit really hard, though. I mean, really hard might be an overstatement, but like we're down 3%. If you look at a chart, it doesn't look pretty. Does that make sense, or is this an overreaction?
I actually think it does make sense because even if they don't get the volume, they usually get the margin. And margins are not bad. Margins are good, but the incremental margin was not that good. And also, there's one business there. It's called SPS, but it's warehouse automation generally,
Yep.
and it's been really weak for a long time. It's small, but I was hoping they'd say something like maybe they're going to do something about that. And it's had 9 straight quarters of declines year over year, and I'm talking over 30% this quarter, and double digits the last few quarters. And today he said we're definitely committed to this business. It's a growth business long term. But you get tired of that kind of numbers. It's only 15%, so it doesn't kill them. But it's getting old. So that's
And I'm
my
looking
word
at
criticism.
the stock on the trailing 12 months down a couple of percent. It's really done nothing. I would think with aerospace exposure, I'd want to own this thing because Is
Yeah.
aerospace spending in general?
Yeah, I mean,
growth?
it's 40% of the company. Does have a good outlook. That grew 15% in the quarter against double digits last year. However, there's been so much transition and change in so many of these big companies, right? And Honeywell is unchanged. And in sometimes you can say if it ain't broke, don't fix it. But people want change out of these diversified companies, and they still own the same 4 businesses they've owned for a long time. They run them well, the margins are great, but it's like, well, what are you going to do for me today? So the ones that are running are the ones that are narrowing their businesses or, you know, making some big moves, and they haven't really made big moves.
Is this the question that I'm going to ask about? Is it just too big? It does too many things. They're not getting credit for the things that they do well, et cetera, et cetera. And I say that because I feel like every how many years? 8 years? 5 years? Will we go through the same conglomerate conversation?
We will. I've gone through it about 4 times.
There you go.
You put them up, you put together different businesses so you can smooth the cycle of these industrial businesses, right? Then somebody decides we need focus, and then they sell them all, and then we go through a bad cycle again, and they go, oh my God, look, I'm just in HVAC now, and my business is down 20%. I better buy something to balance that out. I think it's the bankers are behind it, you know, they get both sides of it. But so this is running. This has been running for a couple of years. Yeah, in a couple of years, it's gonna change again. Yeah.
So, all right, so that's Honeywell. What else are you seeing in your space in terms of companies reporting, and what are you kind of learning about, I guess, industrial America?
I mean, you are seeing the top line is generally slower. The margins are holding together for most companies better than expected. And then you have these great executors like Parker Hannifin. In the old days, if you saw industrial production being slow, their business would fall apart. They have completely changed their portfolio. They're 30% aerospace now, and they execute like all the time. And so they raised numbers by, from $23 consensus, $23 EPS to $24 with a half a year left. They gave us another $1 in earnings, and it's all margin. And so the guy and Carrier is executing really well.
Stock's up 5%. Parker Hannifin's up 50% on a trailing 12-month basis. Yeah.
I mean, there's companies like United Rental that's doing great too, but that's because they've got trillions of dollars of money from the government, right? Parker, it's execution, and having a better mix. So, there's a number of those companies that are
Cleveland,
really doing a great
Ohio,
job.
Parker Hannifin, Cleveland, Ohio, which is your country. That's right where, industrial America, 62,000 employees.
I've watched that company.
It's got everything.
From a company like so volatile, low margins to the company it's today. It's an amazing transition, and I wish I could own it. But.
Here's what fair enough. That's a recommendation.
Because we don't own stocks here.
You cannot. Full disclosure. So what I don't understand is that the companies that should be benefiting from the infrastructure bill, the IRA, and the CHIPS Act, it should be all of these companies, but we're not seeing that uniformly across the board. In fact, some of the companies like a Honeywell that you think will be crushing it with it are struggling in certain parts of their business. What is up with that?
It takes a while to get these federal things going, right? So what is running now, 2 years later, or 2.5 years later, after it passed, is the infrastructure bill. So you're seeing a lot of money flow to that, and that's the story on United Rental and Ashtead and some of the others. The IRA, which is the other big chunk of change, the states have to come up with their own process of giving out the money, and I was just at an HVAC show, and there's 50 different.
Yes, wait a second. Alex Steele goes to Florence, Italy.
Exciting.
You go to an HVAC show in Cleveland, was it, or Orlando?
No, it was exciting. It was in Chicago.
There you go. Okay, Chicago.
All right.
Okay,
That's the world. That's the world counter.
Before she goes, we got to do Karen.
Wait, they can't get the processes set up.
Okay.
So, but the money is there, the demand is there. They can't get their act together. That's the story on that. But it's going to come.
Karen Trivia, where did she start her career? Anybody? I'll give you a hint. New Jersey. It was in New Jersey.
Can we do multiple choice?
Yeah.
No, you already said it. Okay.
No. Markel, wasn't it?
Oh, yeah. I had 2 factory jobs. I did Nabisco. That was the good job. But then I did Markel. And Markel, they're both gone. Markel burned down.
Who thinks that Karen's the coolest, most interesting, smartest person that we
She's
know?
actually done it.
She's done it.
Oh,
She doesn't talk about it. She
I
did
sweat
it.
it. Yeah, it was unpleasant.
And she's worked on Wall Street for a long time, buy side, sell side, covering these stocks forever. She knows all the management team. She knows all the people to talk to. That's why we're fortunate to get her in our studio here. So we'll let you get back to earnings, Karen. Thanks so much for joining us. Honeywell seeing a little bit of a softness here today. Karen Uberhardt, she covers all the industrials, all the ags. she's been on top of these big John Deere earth mover things. I don't know what's going on there, but that's kind of her job. She does that for Bloomberg Intelligence. Looking at the markets here, we're up about 0.5% on the S&P 500. The Nasdaq's up about 0.75%. So we'll take that. The Russell kind of flattish here today, so underperforming a little bit. Yields, the 10-year Treasury 3.86% off 5 basis points today. So yields pulling in for a third day in a row. This is Bloomberg.
company news headlines on Bloomberg Radio.
And I'm John Tucker in the studio with a look at some of the company stories we're following. Let's start off with this story because it mentions Taylor Swift. Universal Music Group, this is the world's biggest record label that counts Taylor Swift and Drake among its artists. They've begun pulling music from the social media platform TikTok after extensive contract negotiations between the two companies apparently has failed. American Express and Delta revamping their co-branded credit cards to offer new rewards and benefits that target both frequent flyers and everyday spenders who frequently charge meals at restaurants and trips through rideshare services. Travelers now going to be able to use companion certificates to fly outside the continental U.S. for the first time. As part of the refresh, car holders can also earn more in annual statement credits for paying for meals at restaurants. And Shell, they kept up the pace of its share buyback program after a strong performance from its gas trading offset the impact of lower commodity prices in the fourth quarter. This is the London-based energy giant benefiting from exceptional trading opportunities. The company is going to repurchase $3.5 billion of shares this quarter. And trivia, by the way, what did Shell Trading Company used to do before it merged with Royal Dutch? This was over 100 years ago. Shell, what did they originally do?
Seashells?
See, exactly.
What?
They made bespoke boxes covered with seashells. They were very fancy. That was a big thing.
I legit just made that up.
No.
I'm going to call out. I'm going to have to Google this thing.
That is actually true. Ford today began taking orders for a restyled version of its Explorer Sport utility vehicle, updated with new and improved technology. One option no longer available, hybrid powertrain. And that's your company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, a little bit of a lift today, fading a little bit. Here we have the S&P up 0.3%. The Dow's kind of flattish. NASDAQ up 0.5%. Yields coming in 6 basis points on your 10-year Treasury, 3.84%. We were well north of 4% just a few days ago, so yields coming in here. On the oil space, WTI crude oil is up about 0.75%, $76.40. Bitcoin up just slightly, $42,575 for the cryptocurrency. Right now, let's head down to Washington, D.C., because we get world and national news with Amy Mars.
Thank you, Paul. Defense Secretary Lloyd Austin is giving a mea culpa after keeping Congress and the White House in the dark about his hospital stay late last year.
We did not handle this right, and I did not handle this right. I should have told the president about my cancer diagnosis. I should have also told my team and the American public.
Speaking at the Pentagon, Secretary Austin apologized to the American people and said changes have been made to ensure lapses in communication don't happen again. A stark new warning from U.S. intelligence leaders about the cyber threat posed by China. FBI Director Christopher Wray and other officials warning lawmakers on Capitol Hill that the country's critical infrastructure is vulnerable to hackers working on behalf of the Chinese government. Jeff Green, Senior Director for Cybersecurity Programs at Aspen Institute and former White House Cyber Response Chief, says the American people can do their part.
These intrusions are happening because of fundamental flaws in devices that these critical infrastructure services are using. So you as an individual can't do a lot to protect the critical infrastructure, but you can help prepare yourself.
FBI Director Wray says China's hackers outnumber FBI cyber personnel 50-1. Another legal setback for Donald Trump. A judge in London has thrown out Trump's lawsuit that accused a former British spy of making shocking and scandalous claims that were false and harmed his reputation. Bloomberg legal and crime reporter Jonathan Browning.
Trump himself said that he would be prepared to come to London and testify. But now that the case has been struck out, the question is whether or not he might appeal. Otherwise, it's dead.
Trump sued Orbis Business Intelligence, that's the company founded by Christopher Steele, who created a dossier back in 2016 containing rumors and uncorroborated allegations about Donald Trump before the inauguration. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Paul and Alex.
All right, Amy Mars, thank you so much. We appreciate it. All right, I think what is an unpopular take, and that is I am a huge fan of the New York City subway system.
What?
No, I'll go along with that.
What?
It gets you around, by far, the most efficiently around this city of 5 boroughs. It is just...
How are we judging this, though?
Well, what's my alternative? Taking a car, getting crushed in traffic.
No, that sucks.
Walking, getting run over now by these dudes on the bikes. The subway gets you where you need to go. However, it ain't cheap. New York City's transit repairs to cost $43 billion over 5 years. So that ain't cheap. And I think it's going to be John Tucker paying for it through his congestion pricing. Yes.
But we talked about this in relation to Jersey Transit too. Like you're going to have to raise fares to pay for just repairs, not to like make things better, just to make sure that they don't break down. And that's a tough pill to swallow when you're paying $3 a ride.
I know. But try getting from here to Penn Station. Now I walk a lot, get steps in nice weather, but you hop on the NNER 15 minutes.
No, I'll agree. I think it's just an absolute miracle of transportation and the network that New York City has getting people around. But I mean, think about it. You got to get how many millions of people every day
in and around
to work or wherever it is that they're going, and it's done fairly efficiently. So.
Well, now I just feel bad that I'm like dissing on them. I know I have no tolerance is the thing.
Now, do you ride the subway?
Yeah.
Okay.
I think just that I'm so used to things running that when it doesn't run or I have to wait or it breaks down, it just makes me crazy.
New York City's public transportation system will need an estimated $43 billion for capital repairs during the next 5 years. That's according to a new analysis by the state's comptroller. The MTA's current $51.5 billion capital
I'm
budget
reaching for my credit card.
is largest ever. Directs 80%, or about $41 billion, to state of good repair work. So most of it's just kind of maintaining this thing. So we'll keep an eye on that as I get ready to hop on the subway in a few moments. S&P up 0.2% this week.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we're going to break down some ISM manufacturing number. Came in a little bit better than expected, still contracting, but showing some signs of improvement. We'll break that down. Plus, we're going to talk a little bit about Peloton. Geetha Raghunathan, she covers global media, and unbeknownst to me until just now, she also covers Peloton. So we'll talk about that company. We'll talk about the big media stuff, too, going on. Like, is everybody streaming? And I don't know about that. And then we got Amazon after they're closed. So what we do is, it's half e-tail, it's half kind of the cloud. So you got to have, strong analysis on both sides. We do that at Bloomberg Intelligence. Poonam Goyal, she covers all the e-commerce stuff. And Anurag Rana covers all the cloud stuff. So we're going to get those two together, roundtable, talk to those folks about some of the big things pushing on Amazon. Right now, let's kick everything off with Mr. John Tucker on the Bloomberg Business Flash.
All right, big tech leading rebound in stocks today. Actually, the major averages just turned mixed with the Dow in the red right now. Just 24 hours ahead of the government's jobs figures. The report today showing unemployment claims unexpectedly rising to a 2-month high. That's actually Fed-friendly. After the heightened volatility of Fed decision day yesterday, Marvin Lowe, strategist at State Street Corporation, reacting to Wednesday's Fed meeting.
We heard from the chair that all inflation needs to do is do what it's been doing, and they're going to start cutting. And I view that as pretty positive for the markets ultimately.
And to measure factory activity climbing to a 15-month high at the start of the year. This is the ISM's manufacturing gauge, rising 2 points to 49.1 last month. That's better, but remember, anything under 50 is contraction. And just a quick look at shares of New York Community Bank, 14% lower today. That is after the firm was hit with more analyst downgrades at Jefferies, Compass Point, and RBC Capital Markets. They cut their ratings on the lender's stock following that weak earnings report that triggered the record intraday drop that we saw just yesterday. S&P 500, 10 points higher. That's up 0.2%, 48.56 on the index. The Dow Jones Industrial Average, 21 points lower. The NASDAQ 100, 52 points higher right now. That is up 0.3%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney, we're live here in our Bloomberg Interactive Brokers studio. We're also streaming live on the video side with that YouTube thing, youtube.com, search Bloomberg Radio. And as John was just reporting, ISM manufacturing data came in better than expected. Let's break it down with Tim Fiore. He's at the conference board. He knows all this stuff. Tim, thanks so much for joining us here. Again, 49.1, still in contraction mode, but a big improvement there from consensus and from last period.
Yeah, well, wow. Hi, Paul. Hi, Alex. So, yeah, 49.1 was a surprise. I mean, we're headed in this direction for sure. Last time we had a conversation, I've been saying I thought we'd hit 50 by March. This got there a little bit sooner. But, I look at it from three standpoints: inputs, outputs, and demand. The input story is it just gets better. They're starting to stiffen up. We're investing in working capital, represented by inventories not contracting as much. On the output side, production is stable in January compared to December to 50.4. That's really good. That's no sign of concern or dramatic growth even at this point. The employment side, we continue to take people out of the organizations, which we had said that we would starting back in May, and it continues. So the real story here is on the demand at 52.5 on new orders. That kind of came out of almost nowhere. But look at that in context with the customer inventory number. So we're saying the customer inventories are way too low now. And at the same time, we're saying that the new order level is stepping up. So I think those are absolutely related. Our panelist companies' customers have gone back to them, and they've probably revised their forecasts for 2024, and now things are underway.
So, Tim, hey, it's great to see you, by the way. I have to say, this is a great set of data here, super surprising on different levels. When you talk about the inventory, do you think that the orders are being used for end demand, or do you think the orders will be replenishing that inventory? And what does that inventory wind up looking like versus, say, before COVID?
Yeah, I think it's intermediate products and raw material. So we've been really tight with investments in this area. We spent we spent what 11 months contracting our manufacturing inventory. That really is reflective of the fact that we've been managing cash really close in 2023. We closed the end of the year very lean. Nobody was really carrying any inventory that they didn't have to. They cleaned the place out. So now there's a bit of a restocking going on. I think it's more about intermediate stuff, Alex, and mill run steel and aluminum truckloads and things like that. But I think it's a positive sign that companies are willing to reinvest again in working capital. I think that inventory number will get over 50 by the time we hit March. I'm still on that March thing. I think March is like the magic number. But I've been saying since August, September that we were in the trough. But this could be a sign that we're finally starting to come out. And I think it's about, the demand had to come back. There's some signs of demand here. We do have some headwinds in February. February should have a lot more new orders coming in. So we're going to need that to maintain that 52, 53 new order level. But everything kind of aligns. The other thing that's come up this morning is prices. Prices are growing. So we have the energy markets offsetting growth in the commodity markets. Those commodity markets are probably just going to get stronger. Plastics, aluminum, and steel. Prices are not going to probably come down there. Lead times have been really stubborn. So I think in the energy markets, eventually will probably give way in the summertime as demand increases for summer travel. But I don't see prices really going down anymore, and I don't see them going up much. It's going to be. I think we're going to see some slow demand kind of creep in here. It's going to be like a slow takeoff of a cargo plane rather than a fighter jet. But we're going to be we're starting to grow again nonetheless, and I feel even more confident that March is the right month to see that really show up.
Hey, Tim, what are the companies that you survey? What are they? Are they baking in a recession for 2024? Or do they just think, yeah, growth is slowing, but we're still going to grow this year?
Well, we lived all through 2023 not knowing what the future looked like. So there was a huge constraint on CapEx investment. We undershot our targets. We thought we were going to spend 12% on CapEx last year. We spent like 1%. All of that is now carried over into 2024. I think there's some general optimism now. The softening is still continuing on new orders. The fact that the Fed has said, hey, we're at the top of the rate cycle is really positive. They don't really so much need to know when the first cut comes in. That's not a direct relationship really on manufacturing. The fact that they've telegraphed that we're at the top of the rate cycle was really positive for us. So, things are being realigned. I think, panelist companies are probably putting a stretch plan together for their business plan based on a more accommodative market in 2024. We said in our forecast that 24 would be better than 23. We said that first quarter of 24 would be similar to the last quarter of 23, just slightly better, but the last 6 months of 24 will be much better. So I think we're on that trajectory. This is probably a month and a half before I thought it would show up, but it's welcome nonetheless.
He sounds so jazzed. Tim, going back to the prices paid for a second, you mentioned commodities. Is that a supply or a demand story at this point?
The utilization is fairly high, but you think you see a lot more plant capacity going into the system, and I think that's going to happen probably. A lot of this stuff is long lead. It takes 3 years to put a steel plant in, aluminum smelter, plastics chemical plant. It takes about 3 years to do that. I don't think we're going to see any relief on the capacity side till the second half of the year. And that's what you're on to my biggest concern here, and that is that we may see a resurgence of material price inflation at higher levels than we expected, sooner than we expected, as demand comes back. And we don't have production capacity expanding fast enough. We think we're going to go up about 7%, I think, on production capacity in 2024. The question is when. Do you want to do it too early? No, not really. Do you want to do it too late? Well, that's going to cause price growth everywhere. So the timing of that's where you kind of tie in back to when do the rate cuts come into place. That might spur more demand. We may or may not have the capacity in place to keep prices down. I think the biggest issue in 24 is maintaining an acceptable price level.
Tim, you're based in Miami, right?
I'm in Jupiter, Florida.
Yeah, I've got a huge problem with that. There's no manufacturing in Jupiter, Florida. You should be in like Peoria. What are you doing in Jupiter,
I'm also
Florida?
in Connecticut.
What's that?
I'm in the heart of manufacturing technology in Connecticut. Now, you got to give me some relief there.
All right, very good.
That's where manufacturing started in America.
Yeah, I know.
Vermont, Connecticut.
Yep, absolutely. All right, Tim Fiore, good stuff. Appreciate it. Tim Fiore, chairman of the Manufacturing Business Survey Institute for Supply Management, Wisconsin, Jupiter, Florida. Man, it doesn't get much better than that. All right, let's pivot over. We've already established that John Tucker is not and is unlikely to ever be a Peloton user. How about you, Alex?
Okay, A, it's a space thing.
Okay.
I definitely don't have the space for it.
Okay.
And I don't want to.
Okay, that's good. Even better. All
No,
right.
I have a real bicycle.
You have a real bicycle.
But do you
Okay.
use it?
I go to, there are trails on Sandy Hook in New Jersey
Yes,
and the
very
beach, beautiful paved trails. So in the summertime, I'm not doing it now.
But this is the point. This
That's
is
the
the
point.
whole business proposition for Peloton.
And that's kind of an issue for the company and the stock. Geetha Ranganathan, she is one of the top media analysts on Wall Street, and I found out just today that she also covers Peloton. I'm not sure how that happened, but she's a great analyst, and she joins us here. Geetha, are you a Peloton user?
I am not, Paul.
Oh
No.
my God! See, this is kind of
striking
this
out,
is
man.
the issue, man. It's
Geetha, you
it's
can
just
come
me.
riding with me anytime.
All right, Geetha, what's going on with this company here? Is it just a demand thing, a lack of demand?
Yeah, I mean, this is really a complete train wreck, Paul.
Yep.
And I think investors are really losing patience right now. And actually, if you saw their fiscal second quarter, the quarter that they just reported, the numbers were actually fine, more or less. They reported subscriber growth, which is a good thing, because previous to that, they were losing subscribers because they had a product recall for some of their bike products. They had to completely suspend the production of their treadmill, Tread Plus, and then they've kind of restarted the sales on that as well. So it was definitely a decent quarter, I think. But what really has caused so much of frustration, I think, right now for investors is that there is absolutely no catalyst on the horizon. So the pain points continue to remain pain points. There is no positive revenue growth. In fact, they are projecting a decline in revenue. And as you pointed out, this is completely due to the lack of demand. And along with that, you have this persistent inventory problem, which is causing a huge pressure on the free cash flow of the company. And they continue to burn cash, and they're not going to be cash flow positive till the end of fiscal 2024.
So Geetha, I'm going to go with something that Paul said, which I found was super interesting earlier, that you have super loyal users. Why not try and just get more money out of them rather than try and all of a sudden have mass penetration?
And they've tried to do that, Alex. So
what's the problem
to their
with that?
credit? Yes, I mean, they really face a very, so they don't have enough of a subscriber base, right? So it's about 3 million subscribers. And yes, they're already charging them a good hefty amount. I mean, you're paying for hardware that is pretty pricey, whether it's the Tread Plus or whether it's even a bike. A new bike costs about $1,400, $1,500. So, it is a pricey product. And then you have to pay a monthly fee, right? So you are paying about $45 per month, which is that all access subscription fee. They are trying new things, though. They did realize that they might need to your point, Alex, they did realize that they might want to go out and appeal to a wider base, and so they're trying something called the fitness as a service or a rental program, which is actually taken off. So there are obviously takers out there. It's just not enough to move the needle, unfortunately, for them.
All right, enough Peloton talk. Let's get to the juicy stuff. Let's get to the big media companies that you cover, Geetha. I guess the most topical name these days is Paramount, the former Viacom. Byron Allen, a media mogul of some sort, has made a $14 billion offer. When you talk to your investor clients, is this credible? Is this something that could actually happen?
I don't think so, Paul. I mean, Byron Allen has been bidding for everything in the media space over the past few months, and he has like this long list of empty bids, really. The bid on its own is not bad at all. It was a 50% premium to Paramount's trading price, so it definitely makes sense, and I think it's good for investors. The problem is there's absolutely no visibility into how he's going to get that money. So financing is going to be a huge problem, and then of course you have the issue of Paramount's debt, about nearly $16 billion in debt. and there's like $11 billion in senior notes, which will trigger some change of control provisions and has to be refinanced immediately. So there's just a lot of different obstacles there, and so I'm not really sure investors are thinking that this bid is going to go through.
Does Paramount Plus need a buyout? Like, I feel like these rumors do swirl around a lot. Like, who actually needs to be bought here?
Paramount does need a buyout.
They do. They really do. Okay, so who else would do it then? You listed a lot of reasons why Myron Allen won't, but who can?
So we've had actually multiple suitors kind of circling these assets. We have David Ellison, who is the son of, the mega billionaire Larry Ellison, who has Skydance Media. He's very interested in getting Paramount Studio. Again, this is an iconic Hollywood studio, has some great IP. We have Warner Brothers Discovery was also supposedly interested. You have Apollo, which is also potentially interested. Of course, none of them have necessarily come out with a bid. And so Byron Allen kind of doing what he did yesterday really forces other suitors or other serious suitors to kind of come out and show their cards.
So, all right. So let's go to Warner Brothers Discovery. David Zaslav, there's a company with a lot of debt too. I mean, what's the future? What's the outlook for that company?
I mean, I think, Paul, ultimately down the road, it has to be some form of consolidation. I mean, there is no way that so many of these smaller players, whether it's Warner Brothers Discovery, whether it's Paramount, whether it's, Comcast with NBC, can necessarily function on their own, especially with their streaming businesses. So I'm sure at some point they're going to have to look at ways to kind of consolidate. I'm not necessarily sure it's going to happen right away, just kind of given the regulatory environment and kind of given that whole problem with debt and very high leverage. But it will eventually need to happen.
So, right. Paul, does this make you feel like you wish you were still a banker? Assistant banker for media?
Yes, because my phone calls would be to private equity. I would go to private equity right here, go out there. They still have good cash flow. They can service the debt, and you can sell pieces, parts at certain times, and that's how you do it. I don't think there's any strategics, but that's just me. We'll see how it goes. Geetha Ranganathan, thanks so much for joining us. Geetha, she is the senior media analyst at Bloomberg Intelligence, based in Princeton. She also covers Peloton. Probably for not much longer, because I'm not sure what the going concern situation there is, because they've got some debt, and they're not, as Geetha said, they're not going to be free cash flow until the end of fiscal 24, so I'm just not sure what they do there.
Stock down 23%.
Yep.
So there is that.
Yeah.
52-week low.
Yep. And as Geetha mentioned, she talks to all these investors, and I guess the sense I got from Geetha was they're just kind of like, I just don't see any catalyst here. There's just nothing, no reason to own this thing, and it's too bad because, again, it's a great product, and they did such a great job during the pandemic for a lot of people like me. But that business model just got out of whack with where the real market was for this thing on the other side, which is where we are right now. So they're trying to deal with inventory pricing, all kinds of tough stuff there. So seeing it in the stock price. So, all right, looking at these markets right here, still hanging on to the green a little bit. S&P 500 up 0.25%. The Dow Jones Industrials is absolutely flat. And the NASDAQ up about 1/3%. Yields coming in pretty noticeably here. The 10-year's off 9 basis points, 3.82%. Hopefully mortgage rates are coming down along with it. Help us mortgage borrowers out. That'd be interesting. We're going to have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. The major averages, they have turned mixed right now, with the Dow down just about 1 point. You have 8 of the 11 major industry groups in the S&P 500. They are higher right now. You have technology stocks leading the way. This is another big day for big tech earnings. It's going to happen after the close of regular trading in New York today. Apple, Amazon, Meta Platforms, all reporting after the close. Now, their updates will give fresh insights on how the companies at the heart of the rally on Wall Street we've seen recently are matching up to the pretty lofty expectations of investors. Apple, as you'll recall, has suffered 5 straight sales declines in a row going into this report. Qualcomm shares, quick look there, they're down 4%. Analysts noting that there are signs of recovery in the key markets for the company, but the chip maker also warning about high inventory levels, and then Citi downgrading the stock to neutral from buy. S&P 500, 14 points higher. That's up 0.3%. 48.59 on the index. The NASDAQ 100, 62 points higher. That is up 0.4%. The Dow right now back up 15 points. Notable treasuries, Paul, you pointed this out. The 2-year, more policy reactive there. That's down 5 basis points. The benchmark, the 10-year, is 7 basis points. We'll call it 8 basis points lower. That's below 383 on the 10-year. And we check the markets for you all day long. Right here on Bloomberg Radio, I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul.
John Tucker, thank you so much. Alex, I did try the cookies.
Oh, yeah,
Florence,
and?
Italy, awesome. Very good.
Just melt in your mouth, light as a feather.
Italians are good on the whole food thing.
Oh, my
just
God.
in general.
But you might as well just apply it right to your waistline.
No, I don't think that's true, because the ingredients are so different than some of the stuff that you get in the States.
Nothing that tastes that good is going to be like
I'm not saying it's going to take pounds off. I'm just saying, like, you're not going to get the same kind of weight that if you went to, like, and bought a ton of Oreos.
Yeah,
in some kind of Nabisco factory.
Well, I'm going to do that, too.
All right, Alex Steele, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio and streaming live as well on YouTube. So you can head over to youtube.com and search Bloomberg Radio. That's where you get the video feed. Big earnings again after the close. We got Meta, got Apple, and we got Amazon. And the way we do it at Bloomberg Intelligence, looking at Amazon, we got to recognize that this is a huge retailer, of course, global retailer, but it's also a huge technology company. It's really evolved and developed its technology over the last 10 years or so. So the way we do it is we get Poonam Goyal. She covers all the retailers for Bloomberg Intelligence. And we got Anurag Rana, who covers all the tech for Bloomberg Intelligence. We bring them together and we roundtable them, and that's how we can really get a holistic view of what's happening at Amazon. Anurag, let's start with you here. What do you want to hear from Amazon tonight? What do you need to hear? What's the market need to hear about their cloud business?
Well, the magic word tonight is cost optimization, that they are not seeing any more of it, that customers have started to spend back. That is going to really be magic to my ears. I think we heard some of that from Microsoft, but not entirely. I think that is the direction that is going to set the direction for cloud names for over the next 90 days.
Can I ask the dumb question? Yes, in real terms, what is cost optimization? Like, what does that actually mean if I'm reading through the call?
So sorry about that. So that just basically means companies or corporations are not cutting cost in their cloud consumptions, that they've stabilized or started to spend back again. That is going to be the only thing that I care about.
See, Anurag's whole career following technology, it's always a growth industry. They never have down years. It's just a question of how much growth.
Totally.
So the tech spending, apparently, over the last couple of years, the growth rate has slowed, and that's got these tech analysts all anxious. And so they want to see a re-acceleration of that tech spending. That's my read. Let's get to the important stuff when you're talking about Amazon. That's like people buying stuff and the box is showing up at my door. Poonam, you cover the whole retail space. You've got the best view of this. How is retail spending out there, and how is Amazon competing?
Amazon's taking share, and retail spending overall is good, especially online. And when you shop online, Amazon is the clear winner there. So we're actually expecting good results for the fourth quarter. We know holiday was strong, and Amazon likely took share there. So from an online standpoint, we think they'll do well, and the results will be driven once again by gains in their third party, which is the sellers that sell on Amazon versus their own first-party goods, will be the reason that they outperform.
to that point, aren't we isn't Amazon kind of looking into a world where they might not be responsible for those third-party sales in terms of safety and quality, et cetera? And how dramatic could that be?
That could have an impact. Right now, Amazon is not responsible. So if you're the seller and you're selling something on Amazon, it's not Amazon's responsibility to authenticate that good or even to maintain the control over that exchange of goods. But if that changes and Amazon is going to be accountable for that and seen as a distributor, as what we're hearing, then that could change things up, and it could make Amazon institute more best practices and also be held liable, right? Because we know that there's a lot of stuff sold on Amazon that could be counterfeit. And till today, Amazon has no responsibility over that and doesn't need to.
Hey, Anurag, give us a sense of just kind of the landscape of cloud computing. We got Microsoft, Amazon, Google. Kind of, how does it play out, and how does Amazon position itself?
Yeah, so in the cloud infrastructure world, which is basically the storage and the computing that you need to build any application, there are three big players. It is Amazon, the number one with the biggest market share. Microsoft has done a phenomenal job over the last 10 years to catch up and is the second biggest. So, structurally, there are two big players, Amazon and Microsoft, and then Google's been catching up, and Google's a very viable contender to both of them. What's really happening right now, at least in the last 12 months, is Amazon does not have an AI play as such. Now, that's really not true, but that's the narrative in the street, that Microsoft has a close relationship with OpenAI. They're pretty much kind of, are very close to OpenAI, and OpenAI's backend is everything Microsoft Azure. So OpenAI makes more money. Microsoft really, benefits from that, which is what we saw in their results a couple of days ago. For the case of Amazon and Google, they really need to talk about what is going to be their strategy. And their strategy actually is very simple. Enterprises or corporations, when they're going to go out and build those AI models, they're going to use one of those three, cloud vendors. I think for them, it's taking a little bit longer, maybe, a year down the road, 6 months down the road. And that's what everybody says, that, Microsoft is ahead and Amazon. I think in the long run, all three will make a lot of money. It's a matter of when it starts.
To your point, Paul, though, Azure Cloud Service sales gained 30%. Hello, what company wouldn't want that growth rate? But it was like just 1% more than what the street expected. But those are some big numbers. I gotta say, we gotta turn to Apple because we just have a few minutes left. But I'm having a really hard time getting excited about Apple's quarter today. They're gonna make a lot of money. They're gonna sell a lot of stuff. And then what? Anurag, what are you expecting?
This is probably the weakest I've gone in terms of sentiment for Apple. There isn't much going in their favor at this point. Regulations, weakness in China, them losing share in China. It's just probably the lowest expectations I've seen going into a quarter for Apple. I'm not expecting any major positive surprises, but guess what? Sometimes that's when fun happens, is when you go in with low expectations.
Hey, Poonam, as we step back here, how does Walmart compete against Amazon? Because it seems like the Walmart.com, they've done a really, really good job competing from my perspective, just as a user. What do you think?
I think Walmart has made some strides on its .com presence. But, when you think about Walmart and you think about Amazon, and I think they can both grow share together. It's not that Amazon loses if Walmart wins. But remember that Walmart's business, it's still 50% grocery. And grocery is a low single-digit business for Amazon. So they're almost two companies that may seem alike, but they're very different in their product offerings. We think both can grow their online business. Both can drive double-digit gains as the online vertical just grows as a channel, irrespectively of what happens to brick and mortars.
I love that we spent one question on Apple, and then we're like, yeah, okay, let's go back to Amazon, which I think says a lot about to Anurag's point.
I think from what I understand, talking to Anurag and other tech folks, it's all China. If you get comfortable in China, you can get comfortable in Apple. If not, then not,
Yeah, and they're just the sentiment's just kind of meh at the end of the day. So, Poonam, when we go to Amazon, though, for a second, what is going to be the catalyst growth driver, though, on the retail side? Or is it all just going to be focused on that cloud?
I think a lot is focused on cloud, but keep in mind the retail side brings advertising revenue.
Yeah.
So the ad revenue growth is going to be a key focus area for Amazon, not just today, but also for the foreseeable future, as that drives very high profit margins, close to 50%. So we think you want to see retail grow, right? Because as you get those Prime members shopping on Amazon, you also get more eyeballs and you get more ad revenue.
Yeah, that's right. I mean, the digital advertising business for a long time was, in fact, the duopoly, Google and Facebook, and then Amazon came on. And in a matter of, I don't know, what's it been, Poonam, 5-6 years, they've become a huge advertising platform.
They control about 10% of digital media advertising, and they're at a run rate of 50 billion, and we think they can get to 100 billion over the next several years.
Yeah, and that's literally from nowhere, standing start. So it's really amazing. All right, guys, thank you very much. We appreciate getting both of you together. Poonam Goyal, Anurag Rana, both for Bloomberg Intelligence, covering both the retail side of that story. And as Poonam says, that's important for a lot of reasons, including the fact that it's driving this advertising business for them. Then, of course, on the technical side, the cloud has really been the profit story for the company, and really probably the multiple story for the company. You get a kind of a high multiple on that cloud stuff.
Right. I mean, hence the whole, if you only beat by 1 percentage point for growth, you're kind of disappointed in terms of the valuation.
I wonder if you ever, I mean, just putting my banker hat on, I wonder if anybody has the gumption to go to Amazon and say, hey, you want to split up these companies, just spin out the cloud business? I mean, that would be kind of cool.
What would be the downside to that?
I don't know. I mean, the kind of giving up a little bit of ownership of it, giving it some more ownership. I don't know. It's interesting. I think it'd be kind of cool because I would think that would get a monster.
Oh my gosh, yeah.
All right, right now let's head down to Washington, D.C., World and National News with Amy Morris.
All right, thank you, Paul. Plans have reportedly been approved for a series of strikes over a number of days against targets, including Iranian personnel and facilities inside Iraq and Syria. Weather is going to be a major factor in the timing of these strikes. CBS is reporting there have been no new attacks on U.S. troop locations since Hezbollah announced it was suspending military operations against American forces. European Union leaders have unlocked about $54 billion in aid to Ukraine after Hungarian Prime Minister Viktor Orban lifted his opposition to the deal. Now, Bloomberg's Ellen Milligan is covering the EU leaders summit in Brussels and says the deal wrapped up quicker than expected.
On a 50 billion euro aid package for Ukraine, all 27 EU leaders were able to strike a deal.
Bloomberg's Ellen Milligan reports the leaders agree to debate implementation of the aid package every year to gain Orban's approval. The House has passed a $78 billion business and child tax break bill that would provide a boon for U.S. companies with large capital and domestic research expenditures. It was a bipartisan vote with a few Republican holdouts like Thomas Massey of Kentucky.
There's something in this bill called tax credits, but they're also called refundable. So what is a refundable tax credit? It's welfare by a different name.
Republicans are pushing back against a provision that allows some people with no taxable income to collect the child tax credit. Illinois Democrat Danny Davis says the bill isn't perfect, but he supported it.
You know, I've been told that a half a loaf is better than none, but this isn't even a half a loaf. But I'm going to vote for it because our families and businesses need help.
The White House says once it passes the Senate, the president will sign it. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Major stock averages, well, right now they're all higher, but pairing some of the earlier gains, the Dow actually has been jumping in and out of gains and losses. Investors, of course, waiting for the earnings results. This comes after the close of regular trading in New York. From the tech mega caps, Apple, Amazon, and Meta Platforms, up 17%. You have Corteva, the leader in terms of index points in the S&P 500 right now. This is the agricultural, chemical, and seed company. They're reporting an earnings beat. Well, after the Fed chair, Jerome Powell, threw cold water on the idea of a March rate cut. Karen Ward at J.P. Morgan Chase says inflation pressures, they've eased in a lot of key areas.
We should be anchored on what our labour markets are telling us about where inflation is going to be in 2 to 3 years' time. And the Fed has got 4% wage growth with 2% productivity. So that cost pressure coming from the labour market has receded.
And then you have Merck forecasting annual profit ahead of Wall Street views. Sales of its cancer blockbuster Keytruda remaining strong ahead of a looming expiration of their patent. Merck could face generic competition later this decade for its top-selling Keytruda. That grew 19% to 19%, $25 billion in sales last year for the drug. Of course, that's Rahway, New Jersey-based Merck and Company.
Yes.
S&P 500, which you go by the headquarters when you're on New Jersey Transit coming into work. S&P 500, 22 points higher. That's up 0.5% at 4867 right now in the index. The Dow Jones Industrial Average up 79 points. That's a rise of 0.2%. The NASDAQ 100, 82 points higher. That is up 0.5% right now. And as far as yields, the 2-year, 3 basis points lower. That is at 4.17, and the benchmark 10-year yield right now, 7 basis points lower. That is at 3.83. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alex and Paul.
Johnson & Johnson, New Brunswick, New Jersey.
That's the world corporate headquarters. Yep. And, you know,
there's a bunch of, why are there so many pharmaceutical companies in New Jersey?
Because New Jersey's the place to be.
Is it corporate? No, low. I don't know if this is true.
Well,
I'm just asking.
It might be. I mean, you'll recall that the precursor to ExxonMobil, Standard Oil, transferred from Cleveland, Ohio, to New Jersey because the New Jersey legislature at that time enacted laws and regulations that were favorable to trusts such as that. So who knows? Maybe that's in some ancient legislation.
What do people like? What's the motivator for most things? Taxes and profits. Right. So my guess.
But I mean, literally all over the state, there's huge for all the big pharma companies. They're all over the place.
Yeah, you go down Route 1 in New Jersey. It's just like this company, this gigantic manufacturing facility.
Cloud, they're all over the place.
Yeah.
So anyway, it's good employers. We've got, in just a matter of moments, we're going to have Qualcomm CEO Cristiano Amon. He's going to be speaking with Bloomberg's Ed Ludlow, talking about the quarter they reported last night. The stock's off about 3-4% here. Earnings forecast for the current period meets analyst estimates, but it's all about the handset chip sales. This is, the phones. These are the big guys that put the chips in the phones, which is obviously over a period of time, a great growth story, but apparently there's been some relatively short-term inventory issues. There's a lot of phones out there.
Yeah.
You got to work through that. So that's kind of been the issue for that company. So
it kind of goes back to that super cycle story, right? Like, so we're waiting for that to happen, and then the penetration. Citi, though, downgrading the stock to neutral from buy based on those high inventory levels after the quarter. Paul, Bloomberg Intelligence, though, trying to have a little bit of optimism here. Kujan Sobhani saying that this may mark the beginning of a turnaround in smartphones.
Yep. I don't know. Yes, I have I don't know what I got, the 11 or something. I haven't upgraded in a while. But I don't know. We'll have to see. But I mean, it's certainly a growth market, and you got to think about some of the growth markets like India. Huge growth market. China's still growing. The question is, where do they get their chips?
Yeah.
So what's not in this story, which I'm sure they would like to get in the story, is just some AI buzz.
right?
This is a phone.
Because they don't make AI chips at all. Like they're not in that right now.
I know of. Again, but if I were the CEO, I'd be like, guys, can you give me something so I can get on the conference call and say we're making investments in AI and get the buzz?
Well, Morgan Stanley's saying that specifically. They say with some market share headwinds, Morgan Stanley sees limited growth potential intermediate term, but edge AI, so apparently they do have edge AI, presents an interesting opportunity. I don't know what that really means for analyst speak. What does analyst speak mean for interesting opportunity?
We don't really have it in our estimates yet, but we could maybe in the future. And I've got a buy rating on there, so I have to talk about something like that. Investors have been looking for signs that consumers are upgrading their smartphones at a faster pace. On that front, Qualcomm had good news. Revenues from handsets gained 16% last quarter, compared with a 27% decline the previous 3 months. So that sounds like a turnaround. And Qualcomm also said Wednesday that Apple extended a patent licensing agreement by 2 years. It now runs until March of 2027. The chipmaker also signed a new agreement with Samsung Electronics, with the South Korean company agreeing to base future devices on Qualcomm processors.
Well, that's interesting.
That sounds pretty good to me.
Here's my uneducated question. If you wind up having AI more integrated into your stuff, like Internet of Things or something along those lines, or your phone, do you have to go buy a new phone? Like, is that going to be a trigger for a huge cycle?
I don't think so. I mean, I buy a phone because, well, the battery craps out. That's usually how it works. But, I mean, otherwise, it would have to be a really cool improvement in functionality, or but these phones today, they're effectively cameras with a phone, and it's basically your laptop on a phone. I don't even carry around an iPad anymore, for example. It's like everything's on the phone.
It's so true.
Yep. And all the Sweeney family, with one notable exception, is in the iPhone family. And so that,
where did they go?
He's Android. He's an engineer. He says Android's better, and I'm like, come on. Now we can't have our little joint things together because he's got
to pay for his own thing.
He can't FaceTime, so it's kind of silly. Anyway, Qualcomm stock's off about 4% here today. Taking a look at the stock, just over time, it's been a huge company. You always forget kind of how big they are. $159 billion market cap. It's up about 5% over the trailing 12 months. So got a little bit of work to do, kind of getting that message out there for the marketplace. So we'll see. We'll take a look. Again, $142, down 4% today is the stock. Coming up, we're going to have Qualcomm CEO Cristiano Amon speaking with Bloomberg
Tech, B-Tech.
Tech, yeah, Bloomberg Tech, yeah. Ed
Ludlow, Caroline Hyde.
Yeah, he's based out there in California, so we'll have that right for you right now. Let's take a listen.
Thanks for making it.
Happy to be here, Caroline.
All right. Looks like they're having some technical difficulty on the television side. Caroline Hyde and Ed Ludlow, they cover Bloomberg
At some point,
Technology.
we'll say things.
Yeah, he was there. I mean, Cristiano Amon was there. But again, the question, I guess, for them really is, since they have such a heavy reliance. All right, we're going to go back to that. Cristiano Amon, CEO, Qualcomm.
Bloomberg television and radio audience worldwide, more earnings, and this time Qualcomm delivering a solid earnings forecast for the current period, helped by a recovering market for smartphone chips. But some analysts also noting high inventory levels in other business lines. Delighted to bring in Qualcomm CEO Cristiano Amon. And let's get right to the inventory narrative, Cristiano. So smartphone, you said the inventories have improved. The lingering concern is Internet of Things, which for our global audience is basically anything with a network connection, right? From industry manufacturing through to connected devices in the home. And you're saying that they're still working through inventories there. But because that business line is so broad, what can you tell me about where the inventories linger specifically, geographically, heavy industry, retail?
Very good. Ed, good talking to you. First of all, I don't understand where this inventory commentary is really coming from. We saw this, I think, in the press yesterday. Maybe I'll use this opportunity to explain. The majority of our business, handsets, we're working very hard to diversify the business. We're making good progress, but still the majority of the business, handsets. And handsets, we have seen that inventory had actually stabilized since last quarter. I think what we see in the results, especially with the beat and raise in EPS, is that handsets are getting back to normal. We're happy with the health of the Android ecosystem. Premium tier, it's strong with HN3, and we still see that in the numbers. IoT, we talk about industrial inventory actually before every other company. We were some of the first ones to talk about it. It's still a smaller percent of our business. We would like it to be bigger, but we had said that that is the lowest quarter, and we expect to see growth in the coming quarters. So, yeah, I don't understand this comment on inventory. We're happy with the results, and we're happy with a number of the analyst revisions that actually came out this morning on the stock.
I'm just reading the transcript from the earnings call, right? And you said second half of the fiscal year, as we see the inventory kind of normalizing in the IoT context. A positive area was China. You promised that we would get an uptick in China sales. We did get that. Does it reflect customers in China having been through inventories, or is this a commitment to forward ordering, signs that those end markets have demand?
Yes, this is a great question. And I want to start by saying we have two vectors that are very encouraging. One vector is the premium tier has proven to be resilient, even within the macro uncertainty. And it shows that users, when they go buy their next phone, they want a better phone. The second thing is we're starting to see the first innings of Gen AI. Some of the use cases are starting to come in, and that has brought some excitement. Some of our customers had record pre-sales of their new devices with HN3. And what we see in China right now, I think there was a lot of concern in the past about Huawei coming back to the phone business. But what's exactly happening is Huawei is increasing the size of the TAM, and our customers are holding share and seeing opportunities in the premium tier, and that's reflected in the quarter. We have a lot of orders of HN3, especially for phones that launch or launching in the market. We're happy. We're just cautiously optimistic since we don't know how the second half of the year in phones in China is going to unfold.
Cristiano, how do you navigate geopolitics when it comes to China, not just macroeconomy?
We just do business. I think we focus on what we can control. I think we're happy that we have a strong relationship with China. Our technology is differentiated and is helping, I think, both sides. One, it's business, it's export of semis for the U.S., for China. It has been growth for technology. We have not been impacted to date by any of the restrictions. And as we diversify the company going from handsets to automotive and industrial, I think we see our China business expanding as well.
Let's go back to the bread and butter that is phones, though, and I think about Apple's earnings coming after the bell, everyone wanting to get some sort of steer on where the consumer is at right now. And ultimately, you've said, look, consumer, we're recovering in phones. But how excited are consumers to renew, do you think? And how much will this manage to carry you on into the rest of 2024?
Look, we don't want to make a prediction. Phone cycles is very difficult to make predictions. There are a couple of things that we know it will happen. Once every 10 years, you have a generation of wireless. We've just been to the 5G transition. But the early signs of Gen AI use cases are actually exciting. I think you saw Samsung launching S24 with a number of Gen AI use cases running on the device. Same thing happened in China, just mentioned about that. So that could create an interesting opportunity for upgrade cycle in phones. It's just hard to predict the timing.
For our Bloomberg television and radio audience, we're speaking to Qualcomm CEO Cristiano Amon. Cristiano, you and I have talked about on-device processing of generative AI tools and running of large language models, on-device airplane mode. When does that business that you're involved in show up in the financials?
Yeah, the way you should think about the financial impact, especially if you think about phones, is really a premium tier becoming a larger percentage of the market, and we're kind of starting to see that. And then the other one is more silicon content. I think our ASPs increase on the chipset, and that has a positive contribution for the business. And the dynamic that we see with the success of HN3 is just the first signs of the opportunity. Just to be cautious that we still need to see a lot of use cases develop.
Lots of partnerships and deals kind of talked about on the call. When we think about names like Apple and Samsung and the handset makers in China, look at the history of Qualcomm. can you kind of guarantee investors that you can continue forward on the deals and avoid the legal entanglements you've had in prior years?
All right, so you mentioned partnerships. I think we have two very important conversations, and I want to make a distinction. I think the first one is our licensing business. And we have been saying that the licensing business, which has been the reason we have been in a number of disputes in the past, is very stable. It's one of the most stable times that we had since the beginning of the licensing business. And in the quarter, we announced three very important milestones. One is we saw an extension of the Apple license agreement. That means that Apple is paying license for the Qualcomm standard essential patents, and that's regardless of using or not using a Qualcomm chip. We also saw two Chinese significant customers renewing the license agreement, which speaks to the value of the Qualcomm intellectual property portfolio, even in China, in the middle of the geopolitics. That's a very positive sign to investors. Now, the second part of the question is about partnerships. What's exciting about Qualcomm, and I know we spend a lot of time talking about handsets, but auto, there is a lot of reports on the peers of a decline in auto. If you look at this quarter, we actually had record auto revenues with 31% growth year over year when the whole market is down. And that speaks to the number of ships we've been making in auto for the future of the automotive industry. And that's an important metric where the future of Qualcomm is going to be.
Still about that diversification. Qualcomm CEO, Cristiano Amon, great to have some time with you. We thank our radio and TV audiences.
All right, that was Caroline Hyde and Ed Ludlow, Bloomberg Technology. And Cristiano Amon, CEO of Qualcomm, reported some numbers last night. Stock's off about 4% here today, up about 6% on a trailing 12-month basis here. But I guess for that company and their chip business, primarily driven by the handset business.
Yep. And he says, we were talking about AI. Use case is exciting, timing hard to predict, Internet of Things, they were supposed to be a $1 trillion business a few years ago. Like, it's there, but it hasn't seen the same kind of growth maybe that we were all expecting.
Yep. So we'll keep an eye on that one. But good to hear from the CEO directly after their earnings last night. Boy, another stock in the news, a little bit local here to New York. The New York Community Bank stock is off another 12%, hitting another 52-week low yesterday. I think they really surprised the street yesterday with their results and talking about the risk to their loan portfolio, causing them to jack up reserves and cut their dividend. It really would seem to be a surprise to investors. The stock was down like 40% yesterday, another 12% today.
Yeah, now it's down total about a little over 45. We're like slightly off the lows, but Moody's may cut rating to junk. But so I was away in Florence, I was doing my oil thing, and then I log on the plane and I was like, what just happened?
Yep.
Is this like a systemic regional banks are failing thing? Or is this like they had a couple bad loans that they had to account for and kind of did their due diligence and got out in front of it?
Yeah, I think it's probably, from what we've heard, now the Citizens Bank CEO says NYCB an outlier as regional bank pain is in the past. We had Herman Chan, who covers the regional banks for Bloomberg Intelligence, say also that it is not systemic, that it is kind of specific to NYCB because of their particular loan portfolio tied to a lot of rent-controlled housing, and there's not so much they can do in terms of offsetting some of the higher interest rates that they're dealing with on their balance sheet. So, but it kind of brought back some bad memories from about a year ago when we had those West Coast banks have some issues, which then at that time it certainly did call into question, hey, did we have something going on in the banking space? Turned out, I think, with hindsight, the answer to that is also no. It was specific to those individual names.
But on the flip side, yes, New York Community Bank Corp bought Signature Bank's deposit base, right? So that is theirs. But they have higher capital requirements and more regulatory scrutiny. They're not the only ones who are going to have that. So you have to wonder when these guys wind up reporting. There's a reason why the KBW Regional Banking Index now also has a 2-day drop. Do they have this offshoots of the loans? Maybe not. But they definitely will still have the regulatory requirements and how they're going to account for that.
Yeah, it's an issue. And, as we kind of learned, I guess, last year, while there maybe not be some loan book quality issues per se, i.e. taking big write-downs, it's going to result in lower earnings for a lot of these companies, and that's kind of what Herman Chan's been telling us about, and that's what's going to be weighing on the stocks. Now, we did see the stocks rally; those regional bank stocks rally off, kind of 30% off of that October low. So people were kind of saying, all right, maybe we're either setting a bottom or getting close to a bottom. But then this came along.
Yeah.
And another little one. So we'll pay attention to this. And again, we've got some smart people covering from the Bloomberg News side. We've got Herman Chan and his team at Bloomberg Intelligence looking at it from there. So we'll have you covered there. S&P 500 up 0.5%. Balance of Power. That's coming up with Mr. Joe Matthew from Washington, D.C. This is Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
This is a dangerous moment in the Middle East, so says the Secretary of Defense. Welcome to the fastest show in politics as Lloyd Austin meets the press today at the Pentagon to talk retaliation, but makes more news on his health, apologizing to the American people for the way he handled his prostate cancer surgery. We're going to have the latest on all this straight ahead from Bloomberg's national security team. Nick Wadhams will be with us with insights today from Holly Dagris of the Atlantic Council, with news leaking now on what a possible retaliation might look like. New numbers on the campaign trail spell trouble for Nikki Haley. We'll have more on both sides of the campaign with Mohammed Yunus of Gallup, and analysis from our panel today. Bloomberg Politics contributor, Democratic analyst Jeannie Shanzano is with us, alongside Lisa Camuso-Miller, Republican strategist, former comms director at the RNC. We have a lot to cover this hour, and we start, as always, with a look at Wall Street. Charlie Pellet in New York. Hey, Charlie.
Hi, thank you very much, Joe Matthew. Happy Thursday. I got a lot to cover as well, with the Dow, the S&P, NASDAQ all advancing. Tech advance underway right now. Stocks are higher as traders await earnings from a trio of mega caps. They're also weighing mixed economic data ahead of tomorrow morning's jobs report. But we begin with tech because right now we have got NASDAQ up 96, gain there of 0.6%. NASDAQ 100 index also higher now by 0.6%. S&P up 29, that is a gain of 0.6%. The Dow up 136, up now by 0.4%. Also advancing today, the Russell 2000 index of small cap shares. It is up now by about 0.1%. 10-year yield 3.84% with a 2-year 4.18%. Gold up 1%, now at $20.60 the ounce. West Texas Intermediate crude oil is up 1.2%, $76.78 a barrel for West Texas Intermediate crude. Bottom line here, we've got big tech leading the rebound ahead of earnings after the bell from Apple, Amazon, and Meta platforms. But what about politics and the markets, specifically the presidential election and the timing of Federal Reserve interest rate cuts? That question this morning for Stephen Stanley, chief economist at Santander U.S. Capital Markets.
Here's where the election plays in. If the market's right and the Fed gets started early in the year, they can just keep going right through the election. And they've done that on either side, tightening or easing in the past. But I don't think they want to make newspaper headlines in the heat of the election season. So if we get through, let's say, the July meeting and they haven't moved yet, then I think the first move is not going to come until after the election.
Hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Ahead of earnings, Apple up 0.8%, Amazon ahead of earnings up 1.2%, Meta platforms up now by 1.3%. Yes, Bloomberg will have you covered on all of those mega cap tech earnings after the close of trading. Recapping S&P up 30, up 0.6. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
All right, Charlie, we thank you. Welcome to the Thursday edition of Bloomberg's Balance of Power. I'm Joe Matthew in Washington, where we start today with our focus on the Pentagon. A late scheduled news conference by the Secretary of State had a lot of folks thinking we were going to hear about an authorization for a military strike, knowing that the Pentagon has been formulating plans for a response to the deadly attacks on U.S. troops in Jordan just days ago. There was some insight brought by the Secretary of Defense, Lloyd Austin, his first time standing in front of cameras since coming back from the hospital after a lengthy stay, of course, surgery for prostate cancer. And he likely made more news talking about the way that was handled than anything else. Here's the Secretary of Defense from earlier. Well, I guess we'll just have to move ahead and take my word for that. Lloyd Austin, again, holding forth with reporters, and we want to bring in Nick Wadhams, who, of course, runs our national security team here at Bloomberg. It's good to see you, Nick. The impact of this news conference on his tenure, he says he was not prepared to resign, but he apologized to the American people and to the President of the United States. Did he just put this behind him?
I think he has now put this very much to bed. It was an interesting press conference because everybody had really been waiting for sort of proof of life, if you will, him coming out and just saying, listen, I screwed up. I mean, it was so obvious what happened here. He was hospitalized. He had prostate cancer surgery. He didn't tell the president about that. Mm-hmm. He was then hospitalized for complications, didn't tell anybody about that for 5 days. And then he was hospitalized for 2 weeks. So this is a big deal. I mean, if you had a subordinate in the military who hid from his superiors so that he was being hospitalized for, he was in the ICU, you'd get fired for that. And he was actually asked that very question, and what would your response be? And his response, I mean, he was in full groveling mode, basically. Listen, I screwed up. I apologize directly to the president, but he had no intention of resigning. And then, as you mentioned, you've got all the potential for strikes against Iran, Syria, Iraq. So it was a clever pivot in a way, because he's saying, listen, I screwed up, but by the way, look at all this really important stuff that we have to do right now.
Yes.
And he's signaling he's very much going to be in control of that response.
Interesting opportunity, I guess, to address the news at hand, and also maybe try to get around what was a bit of a scandal, if we can call it that, certainly a controversy surrounding the secretary. In terms of what we learned, very little about apparently imminent strikes against Iranian proxies, if not Iran itself. The strike will be multi-tiered, he said, echoing what we've heard from John Kirby so far.
Right. So I think what you're seeing is this administration signaling we may get action imminently, but it's not going to be the last of it. We're still trying to, frankly, sort of puzzle through this strategy, because they are essentially telegraphing to Iran and all these groups over there that this is coming. Yeah. And so why is that? There has been a suggestion out there that it's part of some sort of back channeling with Iran. But it is an interesting strategy. He said, the enemy is not prone to taking one and done sort of actions, and neither am I. And I also have a lot. My guns are a lot more powerful than theirs are, basically. So he's sort of suggesting, look, this is coming, and what you see in the next days is not going to be the last word on this from President Biden.
Are we surprised he wasn't announcing a strike? Do you have any sense of timeline? What you're hearing?
Well, generally speaking, when they do these strikes, they tend to do them at night in the target area, so that's evening our time. Yeah. At least that's what happened when they struck Yemen, when they struck the Houthis in Yemen. So you would anticipate that it would happen in the nighttime. I mean, everybody is just on high alert. We had some indications that it would happen last night. That didn't pan out. But I think what they're signaling very clearly is there will be some sort of strikes. There's a CBS News report today saying in Iraq and Syria, Iranian assets in Iraq and Syria. Very unlikely that they would do strikes on Iran itself for fear of provoking that wider war they say they want to avoid.
I know your team is awfully busy right now, and I appreciate your coming to talk to us, as always. Nick Wadhams with us here on Bloomberg, who runs our national security coverage here in Bloomberg's Washington Bureau. More on the CBS News report that Nick mentions, because this is the most information that we've seen so far, where officials are confirming, as I read, to the news organization, that plans have been approved for a series of strikes over a number of days against targets. Remember this multi-tiered approach the secretary was talking about? They include Iranian personnel and facilities inside Iraq and Syria. This, of course, following the attacks over the weekend in Jordan that claimed the lives of 3 U.S. troops. We add the voice now of Holly Dagris of the Atlantic Council, runs the Middle East program where she is a senior fellow, and it's great to see you, Holly. Welcome to the table and for being with us today on Bloomberg. I'm not sure your thoughts. You watched the secretary today at the Pentagon. Did we learn enough on an official level about what's happening here? And how come I'm reading battle plans in CBS News?
I mean, I think there was more focus on the secretary's health.
There sure was.
Than there was actually on the recent events.
Was that the real purpose of this news conference then?
I felt like it was so, given that that was most of where the conversation was addressing that and the status of his administration at the Pentagon. But just unpacking a bit of what you said about the CBS News report, I think there's a lot of frustration with why is this so publicized that the United States wants to hit back these Iran-backed Shia militias in Iraq and Syria, and so publicly, and even talking about weather being an issue. And I think that the frustration is, well, not just is this so public, but the fact that we're also hearing reports that IRGC top advisors in Syria are actually leaving the country.
Are we telegraphing plans for a reason? Is there a strategy behind this, or is there just news leaking out of the Pentagon?
That is a very interesting question you asked. I think definitely we have to remember that the worry is this becoming an escalation that could potentially lead to an all-out war since the October 7th attack by Hamas, the terrorist group. And so I think you're getting a mix of both, that this is deterrence. Hey, this is what we're going to do. Do not escalate. And you're also hearing from Kataib Hezbollah, the Iran-backed Shia militia that has been more or less seen as responsible for the killing of 3 U.S. service members in northeastern Syria, saying, well, we're going to reduce our presence. We're not going to be attacking U.S. forces in the region. So I think it's a two-way messaging going on right now.
We've heard that this was the Islamic resistance in Iraq responsible for the attack in Jordan, at least according to reports here. Give us a sense. You're an expert on these so-called proxy groups. What are these relationships like? Are these wholly owned subsidiaries? Are they loosely connected to Tehran? How does this work? How does this network happen?
So the Islamic Resistance of Iraq is a new umbrella group, but it essentially is made up of Iran-backed Shia militias that we've known prior, including Kataib Hezbollah. These groups are trained and armed by Iran. They get their money. They do have their own agency to an extent. So whether Iran gave that exact order to kill 3 U.S. service members is unclear, but
the president, though, says they supplied the weapons. We can take that as a point of fact.
Absolutely, and that's where I was saying that they do train and arm them. So I think by proxy, it is in the hands of the Islamic Republic that they had a role in this. I think, well, not that I think, but the fact is that their modus operandi is that they want U.S. forces out of the region and they want the destruction of Israel. And so this attack on Sunday was part of that calculation, that if they push the United States enough on several fronts, which is attacking our troops and bases, that will withdraw from the region.
This was seen as a win to try to get the U.S. to retaliate from their view. Are they in constant communication with their organizers, if I can use that term, in Iran, or do these groups sever ties and act on their own once they're trained and armed?
Well, they definitely have visits from the IRGC Quds Force Commander, and they do interact with Tehran. They're part of something even wider called the Resistance Axis, which is Iran's proxies in the region. So whether it's the Houthi rebels in Yemen, Lebanese Hezbollah, Hamas and Palestinian Islamic Jihad in the Gaza Strip, and of course the Shia militias in Iraq and in Syria. So, and of course the Bashar al-Assad regime in Syria. They're all part of this big entity, and so they are getting some directive from Tehran to an extent because they're all on the same page with their MO.
You just rattled off a half dozen groups that some of our listeners and viewers maybe have never heard of. How many are there in total?
Ooh, I would have to sit there and count, but there are that many. Yeah, because even under the Islamic Resistance of Iraq, there's smaller Shia militias, and so there's at least half a dozen there at least.
You mentioned the Assad regime. To what extent do they play into this?
Well, the Assad regime, of course, they didn't have an exact role here, but what's important to note is that our forces or troops are in Syria because of the fight against ISIS. And there's been a lot of push from these players that the U.S. withdraw its forces. And I think that would be seen as a win. But my sense is that the Biden administration will probably double down on U.S. troops in the region, even though there's been push for, obviously, for them to leave.
You're hearing battle plans, where we started our conversation here, if this is in fact the course that we take, and I guess this could take days or weeks, but going after Iranian personnel and facilities inside Iraq and Syria as opposed to Iran itself, what's the response to our retaliation?
Well, this is a shadow war. It's been a shadow war for 45 years.
Does it stay that way?
It really depends. I think the fact that we've openly and obviously decided we weren't going to actually go in and attack Iran on Iranian soil, whether it be its nuclear program, its defense facilities, or the IRGC itself, I think that's telling that it won't escalate for the time being, but I think it's always worth noting that miscalculations happen, and there's always room for escalation, especially in the context of the regional tension since October 7th.
You mentioned the nuclear program. How likely might be a cyber attack or something that would be non-traditional? We've seen this happen before.
Yes, actually, I thought in my initial assessment among attacking Iran-backed Shia militias in Iraq and Syria and the IRGC itself that we would actually see cyber attacks potentially and additional U.S. sanctions on IRGC-affiliated entities. So
to what extent could we set them back with a cyber attack? Wouldn't that be actually much more costly for the Iranians than going after proxies in other countries?
It can. It will delay their nuclear program, but not just cyber attacks, but actual other instances. We saw allegedly Mossad being behind some sabotage attempts over the years that have slowed down Iran's nuclear program. But unfortunately, what it also did was push it more underground, so that meant it would be harder to actually penetrate if there were an attack on Iranian facilities.
We're talking with Holly Dagres of the Atlantic Council about what might come next here. As we heard from the Secretary of Defense a bit earlier today, a multi-tiered strike. It could start, according to our national security team, as soon as tonight. We're told this is not going to be shock and awe, that you're going to read about some strikes. Maybe you'll see grainy video from a surveillance drone. Is that what you expect, or do we want to shake up these players?
That's a great question. I think that they want to send a harder response than usual because we have a history of already doing such actions in the region against in Iraq and Syria. So I think they want to send a wider message this time around. But will it deter Iranian proxies in the region? I would say no.
So this tit for tat continues then. Do you worry about any domestic terrorism or kind of ancillary damage that could come from this?
In the United States?
Yeah.
No, I don't think that this would trickle back to the United States. I think it will just stay in the region.
A direct attack on Iran would be a different story, wouldn't it?
That I can say that would be a much more complicated story.
How about that? I bet you're pretty busy right now, and I appreciate you coming in to spend some time with us and share insights from the Atlantic Council's Middle East programs. Senior Fellow Holly Dagres, great to see you. Stay in touch with us here on Bloomberg, because this is a story that we're going to keep a close beat on here throughout the day and, of course, the weeks ahead. It's not going to end anytime soon as we try to assemble the pieces here on a story that brings us halfway around the world. With news today from the Pentagon, our thanks again to Nick Wadhams. Coming up next, we're going to turn to the campaign trail and insights from Mohammed Yunus, the editor-in-chief at Gallup. He's with us in studio. Our panel will be with us later. Jeannie Shanzano and Lisa Camusar-Miller today on The Fastest Show in Politics. Live from Washington, this is Bloomberg.
Bloomberg World Headquarters. I'm Charlie Pellet. We've got stocks pushing higher. Big tech leading the rebound today before results after the bell from Apple, Amazon, and Meta Platforms. Shares of all three companies right now, they're trading higher, with Apple up 0.9%, Amazon up 1.6%, and Meta Platforms up by 1.5%. Stocks are rising as traders await those earnings from the mega caps. S&P up 35 right now, close to session highs, up by about 0.7%. Dow Jones Industrial Average up now by 0.5%. That is a gain of 193 points. And NASDAQ, the composite index, up 122, up by 0.8%. 10-year at 3.85%, with a 2-year that is now yielding 4.19%. Spot gold up 1%, 2,060 the ounce. Right now we've got Bitcoin up 1.3%, just above 43,000, 43,011 now on Bitcoin. And West Texas Intermediate crude up 1.1%, 76.71 a barrel. Elon Musk moving ahead with a plan to move his company's incorporation from Delaware to Texas. Musk plans to summon Tesla shareholders for a vote on shifting the company's incorporation after a judge earlier this week voided his $55 billion pay package. Tesla shares now lower by 0.4%. Recapping stocks higher. S&P right now up 34 points, up 0.7%. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
All right, Charlie, thank you. Thanks for being with us here on Bloomberg Balance of Power, on the radio, on the satellite, and on YouTube. I'm Joe Matthew in Washington with new numbers on the campaign trail today. We'll start with South Carolina, only because we've been waiting weeks since the 5th of January for a new reading on this. That was the Immerse poll today. Washington Post, Monmouth University finds not good news for Nikki Haley. The numbers have barely budged, and this sample was taken after Iowa and New Hampshire. Nikki Haley, 32% in her home state. Donald Trump, 58% at home, which she calls sweet home South Carolina. With 3 weeks to go here, a pocket full of money, but no real path, according to most of the experts that we're talking with. It's a big question about what happens if she cannot win her home state. Donald Trump leading among women, among men, and among all age groups in this poll. More where this came from on the other side of the campaign. Of course, Joe Biden is running for re-election here with a real problem when it comes to the economy, connecting the dots, although we have seen some improvement here. But my goodness, third-year job approval average looks second worst, according to new numbers from Gallup. And I'm glad to say we're joined by Gallup's editor-in-chief, Mohammed Yunus, with us at the table here. It's great to see you, Mohammed. Thanks for coming over.
Always great to be here.
This is just not good for Joe Biden, as he's looking at now immigration top the economy in terms of most urgent issues for voters. He's losing on both.
Absolutely. And, let's start with the economy. I love to say the economy in presidential election choices for the American public, it's not just king, it's king, queen, and bishop. The economy is everything.
Yeah.
When you look back historically into all of the modern era presidents, how people felt about the economy, in addition to approval ratings, were the most important thing, not only in how they voted, but also in what they said they cared about when they came to vote. So right now, that's actually a relatively positive point for President Biden. In our Economic Confidence Index, we ask monthly how Americans feel about the economy today and how it's doing into the future. It's been the second consecutive month of improvement for him. So it's still negative 26 out of...
He's got time.
And he's got time. And of course, as you all know here at Bloomberg, the economy can really change from period to period. A big part of President Trump's story was how COVID wiped out the economy. And it became very, very much a different pathway to him seeking re-election. In January of 2022, he had a 50% approval rating. He was doing really well because people felt really good about the economy despite the politics.
You look at 39.8% job approval. You're referring to history. That teaches us that in a re-election cycle, we're underwater. How much time does he have to pull this above 50%? Is that where he needs to be to keep his job?
And let me just correct. President Trump was not at 50% approval. He was at 50% of people that said he should be reelected.
Got it, yeah.
So at that point in his presidency, he was doing really well. President Biden today, 38% of Americans say he should be reelected. We looked at his 3-year average. His approval on the 3-year average is 39.8. He's behind every single president except Jimmy Carter at this point in their presidency. So just to give you a sense of how far behind he is. That being said, a lot of those presidents led in times that were far less partisan than today.
Okay.
And it's really hard for either a Republican or a Democrat to get people from the other side to approve of the job they're doing. And this dates back to President Obama. It's not a Trump-era dynamic.
Well, talk to me more about that, because I don't know how you do your job anymore when people are having fun trying to mislead pollsters, when samples are being challenged by cell phones, no landlines anymore. We don't always know who we're talking to, it seems, depending on the poll. And I'll let you speak for Gallup. But this job's not getting easier as we go forward.
It's absolutely not. But one of the things that is actually amazing and hasn't changed is that with a really good RDD national sample, you get a really accurate measure of how the country is feeling. We were talking a little bit about state polls a second ago.
Right,
it's important to understand that with a state poll, it's far more challenging to really get a representative sample. The other thing, I think, Joe, just as your listeners and viewers start consuming more political news about the election, the notion of aggregating polls is really useful and fun to deal with. It's very useful in the finance world, of course, with indices. It's not a great or accurate way to assess where the public is on an issue. Because a lot of those polls are gathered with different methodologies. Online polls are great for certain purposes. They've proven to not be so great for national assessments of the political testing waters. Our methodologists have worked, year in and year out to really test these tools, because essentially all of these methods are really tools and they're very useful, but it's about what's the right tool to fix, or the right squeaky wheel.
Yeah.
And with national politics, it's about having a really good national phone poll.
How many people do you need to call to get a single valid response? What's that ratio like?
That's a great question. So our polls tend to run around about 1,000 respondents.
Okay, sure.
The hard part is only about 6 to 7% of people actually complete the poll. So you need to call far more people. Fascinatingly, though, with the proper statistical methods and weighting and all of that, you're able to actually get a very accurate sample or read on the public, even with that low level of a response rate. The other, I think, misnomer is that response rate continues to drop dramatically. Actually, it's held pretty flat now for a long time.
No kidding.
So we have a series of ways that we actually, test our own accuracy. We stopped forecasting elections back in Romney-Obama, but we absolutely test to see how people would have responded to that question and what the actual popular vote turnout is. And we do that every election, and it's been remarkable how accurate it is. And it's no secret, if you are a member of APOR, kind of the Association of Public Opinion Researchers in the U.S., a lot of this is debated, written about in peer-reviewed journals. So for those of us in this space, it I think baffles us to note how the public is having a conversation about the polls. You can't trust the polls.
How about that? Yeah.
It depends on the poll. It really does depend on the poll.
Well, it certainly does, and we really do try to talk about methodology when we report these numbers. But this is a fascinating peek behind the curtain with the editor-in-chief here at Gallup. We're in a primary season. We saw in Iowa and New Hampshire that immigration was far and beyond the number one issue for Republican voters. What's that going to look like when we get to the general?
It's only going to grow. Immigration is the biggest.
So it's not just the economy stupid for the balance of this campaign.
It's not. So it's a matter of, so life is multidimensional, right? And so is voting. So the way we ask the question is, what is the number one issue that's the most important for you? That's always the economy. It always pans out. But we also ask a lot of other questions. One of the questions we ask every month is, what's the most important problem facing America? You could say your favorite cereal name, or you could mention a policy issue. The number one issue for Republicans is immigration. I think it's one of the most underreported stories in our times today.
Yeah.
And it's not just Republicans. You know, a considerable, like 12+% of people at the national level are saying immigration. As the situation at the border worsens, which I think from your reporting and others, it seems like it continues to do that.
Yeah.
It is absolutely going to be a major topic, particularly among the Republican Party. It also, if you'll permit me,
please,
perfectly ties into the most important issue for Republicans generally. And we did a 30-year analysis of what are the issues where there's the most partisan divide on in America. The number one issue is the power of big government.
Wow.
And you can see how the issue of controlling the border ties right into that concept philosophically.
So many controversies in Washington right now really do. We've got a deal, we're told, on the verge of a deal in the Senate that's dead on arrival in the House. Donald Trump says no deal. It looks like this could be crashing into the rocks here. What does that do to congressional approval ratings? Didn't you look at this not that long ago? What are they at, 12%? Or I mean, this is desperate.
Absolutely. A good month for congressional approval ratings is for it to not be in the single digits.
Wow.
Which is, it's funny, but it's also kind of scary and sad.
It really is.
That being said, so will you re-elect Joe Biden? We also ask, will you re-elect, do you think that most members of Congress should be re-elected? In that same poll,
True to form.
This is just a few days ago. 24% of Americans say that most members of Congress should be re-elected. But, and a really important dimension to this is when you ask them about their member of Congress.
It's overwhelming, right?
It's like nearly 6 in 10 say they should be reelected.
Just don't mess with my guy.
Exactly.
And that goes for the economy as well, that we've seen in some polling, right? Where people are feeling better about their local economy. The question is when you connect the dots there on a national level.
Yes, and the big issue there is inflation. So even though that ECI number has improved, what we also found in the same poll, 63% of Americans are still saying that price increases are causing them financial hardship. That actually has now plateaued since this whole inflation thing began. What was it, 2 years ago now? So that hasn't improved. You know, you report a lot on the Federal Reserve and the real interest rate.
We talk inflation every day on a politics show.
Of course, absolutely. I've learned most of what I know from your reporting. But from the public's perspective, it's still just as bad. It hasn't improved at all.
Because they're looking at prices from before COVID, and we're talking about just slowing the rate of inflation, not actually turning the clock back. And you wonder if that ends up happening in the next year. You're going to be walking in here with much better numbers, I can only assume, for Joe Biden, but we'll find out together with Mohammed Yunus. Love talking to you. Thanks for coming in.
Great to be here.
Editor-in-Chief at Gallup, one of our neighbors here actually in downtown Washington. Thanks for making the walk over. As we turn now to world and national news, Nancy Lyons has that in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. President Biden says he's working to bring hostages home and to create a lasting peace in the Middle East. He spoke to other leaders gathered this morning for the National Prayer Breakfast.
I'm engaged in this day and night and working, as many of you in this room are, to find the means to bring our hostages home, to ease the humanitarian crisis, and to bring peace to Gaza and Israel, and enduring peace with 2 states for 2 peoples.
Biden today also signed an executive order allowing the U.S. to impose more sanctions on Israeli settlers and possibly government officials who were involved in violence against Palestinians. Drug makers are receiving initial offers today for how much Medicare is willing to pay for their medicines. This kicks off deliberations that could last for months as the nation's largest single health payer engages in drug price negotiations for the first time. Health and Human Services Secretary Xavier Becerra says there will be offers and counteroffers. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. 12:40 the time now on Wall Street. The Dow, the S&P, NASDAQ 100 Index, Russell 2000 as well, all advancing on this Thursday ahead of major tech earnings today after the close of trading. Right now we've got Apple, Amazon, Meta all advancing. Apple up 0.8%, Amazon up 1.2%, Meta Platforms ahead of earnings up now by 1%. S&P up 34, up 0.7%. Dow Industrials up 214, a gain there of 0.6%. NASDAQ up 107, a gain of 0.7%. The NASDAQ 100 Index also up by 0.7%. 10-year 3.85% with a 2-year yielding 4.19%. Gold up 0.8%, 20.56 the ounce. Bitcoin up 1.3%, 43,012 right now on Bitcoin. And West Texas Intermediate crude flat on the day now, 75.81 a barrel. Economic news, there is data on America's labor market in the build-up to tomorrow morning's employment report. And with that story, here's Bloomberg's Vinny Del Giudice.
Weekly jobless claims rose to a 2-month high, as did the total number of workers on unemployment rolls. The labor market has defied Wall Street forecasts over the past year, and yet there are signs of a pullback. Job cuts from United Parcel Service to PayPal to NASDAQ. Meantime, another report shows labor productivity advanced at a rapid pace in the fourth quarter, wrapping up a year of improving efficiency. Vinny Del Giudice, Bloomberg Radio.
Speaking of jobs, Deutsche Bank plans to cut 3,500 jobs over coming years. The reductions, most of them are back office jobs, all part of cost savings at the Frankfurt-based lender. Bank had previously announced Deutsche Bank up now by 5.7%. Again, recapping here, stocks are advancing very close to session highs on the S&P, a gain right now of 36 points, up by about 0.7%. I'm Charlie Pellet. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, thank you. Welcome to Balance of Power. If you're just joining us, we're live from Washington, D.C. on the radio, on the satellite, and on YouTube. We'll be on Bloomberg TV next hour as we try to get a sense of where we're going on a couple of fronts here, having heard from the Secretary of Defense earlier today. No strikes yet that we can tell you about, though reportedly authorized, and we've got an eye on what's happening here in the Middle East as well as on the campaign trail. We were talking earlier in the broadcast about polling. Sometimes money is a better indicator of where we are, certainly as we try to project months ahead into the campaign here. The FEC filing deadlines have passed, and we're now able to look inside the coffers in the Trump campaign and the Biden campaign, and boy, they tell very different stories. We'll get to the Nikki Haley campaign, too. But we talked yesterday about Donald Trump's multi-million-dollar outlays for legal fees to pay for his lawyers. And indeed, we learn now his 5 political action committees together spent $210 million last calendar year, while raising just shy of $200 million. We have a math problem. As Joe Biden stuffs the bank account, his campaign, the affiliated committees, and the DNC raised $97 million in the last quarter. They start this year with $117 million in the bank. So if this is a war of money, Joe Biden might be winning it right now as we assemble our panel. Jeannie Shanzano is here, of course, Bloomberg Politics contributor, Democratic analyst, alongside Lisa Camusa Miller, Republican strategist, former spokesperson, communications director at the RNC, host of the Friday Reporter podcast. Great to see you both. Jeannie, is Joe Biden going to have the last laugh here? This feels tortoise in the hare. People haven't really even been looking at his campaign, but he's stacking up quite a savings account here to spend on a lot of ads later in the cycle.
He is, and they are already putting money into ads. They raised a lot. They really ramped up in that last quarter. We saw that they spent more in the last 3 months than they had the previous 9. And of course, to your point, they raised an awful lot. The one caveat I would say is I remember back to the 2016 campaign, and I remember telling students, money always speaks in politics. Hillary Clinton's got more money. She's got a leg up on Donald Trump. Nobody does free media like Donald Trump. And so it is important that Joe Biden has that money. It's important that they have more than Donald Trump, but they can't stop at just that because Donald Trump is a master at free media, as we know.
Well, true enough, Lisa. What's your thought on that? Does Donald Trump actually need to worry about money because he doesn't like to spend it on the campaign trail? He does in court $50 million to legal fees. Does this matter for a candidate who is so often the exception?
Well, it definitely matters. And because there's so much work to be done, right? I mean, the problem here, and Jeannie has talked about it, we've talked about it over and over again, the American electorate is really not that interested in either one of these candidates, Joe. And so, in spite of the fact that I absolutely agree that Donald Trump is a master at being able to talk about and being able to get his own press, regardless of how much money he spends, he's also going to have to figure out ways to counter what it is that's happening from the Biden administration. And I suspect every political analyst that I talk to tells me that this is going to be one of the nastiest elections we have ever seen before, because neither one of these candidates has sort of a specific something that makes them appealing to the electorate. So they're going to have to make the other look worse.
Okay. When I look at those who are donating to Joe Biden, Jeannie, it's, I realize it's Democrat here, and he's made trips out west. He's done the tour in Hollywood to raise money. He's gone to Florida now. He did Miami this week. Among his biggest donors, Steven Spielberg and his wife, Kate Capshaw, giving $929,000 each. Also on the list, George Soros, Eric Schmidt, the former Google CEO, Shonda Rhimes, the creator of Grey's Anatomy. Is this a good narrative for him when he might want to be talking about individual $5 donations from grassroots supporters?
Well, it's always good to raise money. Donald Trump would take it where he can get it if he would stop alienating the million and billionaire donors who have supported Nikki Haley. But the reality is, of course, you want to couple those big money donations from the Hollywood types that you mentioned with small dollar donations. And where do we see the president? We see him in Michigan. We see him on the ground trying not just to raise big money, which is going to be critical to the air wars that we are going to see. To Lisa's point, they are going to get nasty, and they're already banking on that. But also, you do want to ramp up those small dollar donations, because one thing that we do know from the research, if people give even a little bit, $1, $5, a little bit, whatever they can, that means that they are more likely to get out and support you. Forget about giving again. They are more likely to talk about you to their friends and neighbors and family. And that's what this is going to be in the end. It's going to be a turnout race.
Turnout and engagement. We look at numbers. Lisa Camuso-Miller for the Haley campaign. Nikki Haley pulled in over $17 million in the last quarter and starts the year with $14 million in the bank. I don't know if those numbers sound like enough to you, but does she stay in this race as long as the money keeps flowing? Because these new numbers today in South Carolina are looking pretty desperate.
It's pretty tough for her, and she does really have a tremendous narrative about how she's never entered a race and not won. And it would be, to me, if that is something that she really feels like is an important legacy about her own political career, and then to know that South Carolina the numbers are looking very difficult. Even before the primary season started, it was clear that it was going to be a difficult path for her beyond New Hampshire. And so the one thing I think that keeps the steam in her sails, Joe, is that she has a tremendous amount of support in terms of fundraising. And so that, I think, as long as that continues to happen and there continues to be folks that are standing behind her and supporting her in that way, perhaps she sees it as the long game and wants to stick around. But I don't know. I don't really quite know. It was very clear, and she made a terrific concession speech after New Hampshire. So much so that, everybody's reported it got way under the skin of the former president. Perhaps that ends up being sort of her role in this primary season, is sticking around and making him spend all that money in the primary and not dedicating the money to the general.
Fascinating. It's almost a sacrifice play, or maybe it's a just-in-case strategy. Donald Trump's trial here in Washington is still supposed to begin in March. It depends on that immunity ruling. We're going to have a lot more with our panel, Jeannie Shanzano and Lisa Camuso-Miller. Another late night in the House. They actually passed something, a tax deal, Dare to Dream. But is it already dead in the Senate? We'll have that next. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are on Earnings Watch, specifically Big Tech Earnings Watch. Major names after the bell, including Amazon, Meta Platforms, and Apple. Mandeep Singh is a senior tech analyst with Bloomberg Intelligence.
All these companies had a decline in EPS last year. When you look at Meta and Google, also had a sharp deceleration. Apple was steady. Look, they're not growing top line, but because of the huge buybacks they do, their EPS growth has been still steady. And the main concern around Apple is how do they grow top line because of the China factor. Look, the units are declining, there's no doubt about it, but they're made up with higher ASPs. They're selling the higher end phone more and more, and that has somewhat offset some of the unit declines.
And right now, shares of all three are moving higher. Apple up by 1%. We've got Amazon up by 1.7%. Meta Platforms up now by 1.4%. Yes, we'll be all over these earnings as they break after the close of trading here on Bloomberg. New York Community Bancorp sinking for a second straight day as at least 5 Wall Street analysts downgrade their recommendations. And Moody's put the bank's credit rating on review for downgrade. Yesterday, you recall, the stock was down 37% today. New York Community Bank down another 3%. Deutsche Bank's provisions for losses in U.S. commercial real estate were more than 4 times bigger in the last quarter, as it warned that refinancing poses the greatest risk to the struggling sector. Today, Deutsche Bank also announced job cuts. Shares up now, though, by 6%. Peloton Interactive tumbling after the company said it expects to record another sales decline in the current quarter, down 21%. Those are our top company stories. This is Bloomberg.
You're listening to Balance of Power with Joe Matthew on Bloomberg Radio.
Live from Washington, where it was another late night in Congress. Boy, things are cooking now. The headline actually feels pretty good to read. Something was passed, a $78 billion bipartisan tax package. The vote, 357 to 70. Hey, we're onto something here. The no's came from the conservative right and the progressive left. An organization clicking at high gear until you look across the rotunda to the Senate, where this could be dead already. This is hard to tell. Members of the Senate Finance Committee calling for changes here who could either slow or kill the bill. And Chuck Grassley saying it out loud, expressing concern to reporters, says passing the bill would make Joe Biden look good in an election year. So is this not going to get done? We reassemble the panel for their take. Jeannie Shanzano and Lisa Camuso-Miller are with us. Lisa, what's going on here? I thought the House was the chamber of chaos. It's the Senate who could be the problem here.
I think that's a toss-up, Joe. We got a lot of problems in a lot of different places. But I think, the one thing that is going to be, it's going to be very difficult for the Senate to say no to this. I mean, this is something that it passed under suspension, which means it needs a 2/3 majority in order to get passed. That's a lot of members of the House, R's and D's, who came together to vote on a bipartisan package, a tax package that is really something that, regardless of, this is an election year. We're February. It's February. The American people need support right now. We cannot wait for next February to get something done. So the Senate's really going to have, it's going to force their hand. And I think it's going to be interesting to see how it goes. I mean, you had a couple of analysts on yesterday during Balance of Power, where you had some really tremendous conversations about whether or not the Senate was going to be able to take this bill and not move with it. Yeah. So to me, I think that it's really going to be difficult for them and politically unpopular for R's and D's on the Senate side not to take a very close look at this and figure out how to get it passed.
Jeannie, Republican senators oppose the child tax relief. They say it's going to discourage recipients from working. Progressives think the child tax credit should be bigger. Perfect is the enemy of the good. Is that it?
That's right. And it's a good moment in Washington for something to get passed when both sides on the left and the right are a little bit or a lot unhappy about something. It was a big win for moderates last night in the House. As Lisa was just saying, overwhelming numbers. I think it's tough for the Senate not to pass this, but let's not forget the calendar here. I mean, just imagine they're dealing with immigration. Now they go on a 2-week presidential birthday recess. They come back maybe to an impeachment trial, a government closing, FAA. I mean, the list goes on. And they've got a big tax bill that I suspect they're going to hear Donald Trump, quietly or not, pounding against. And so it's going to be tough. But I do think they really should pass this. There's little excuse for not passing this.
There you go again with the reality check, Jeannie. The calendar is very stubborn. And by the way, you got your SALT vote. The speaker says February 5th. That's actually going to happen. But Lisa, Jeannie's right. If we're going to move forward here with an impeachment of the Homeland Security Secretary, we'll find that out, I guess, in a floor vote next week. The Senate's going to have to do a trial, and then nothing's going to happen here, right?
Well, yeah, it does sound like that's probably headed in our direction as well. Yes, it looks that way. But here's the thing. We cannot, regardless of whether or not that happens, right? Regardless of whether or not we go into impeachment for Mayorkas, I think the problem here is that if the Republicans are not careful, sooner or later, the blame is going to lay at their feet. And I have said over and over, every time something bad happens in this town over the course of the last 12 months, I've said it's Joe Biden's to own. But when something like this happens, when you have bipartisanship in the House, how in the world would it not be blamed on Republicans if this doesn't get done? And to me, I just think that it's one of those things that they're going to have to figure out how to navigate. But Jeannie's right. I mean, the calendar's tough, but the calendar's always tough on Capitol Hill. They're almost never here. And when they are, they can't agree on anything. So it's time to find something that maybe we can get in the middle of the road and get some work done.
And we're getting ready for another 2-week recess. Lisa and Jeannie will be back next hour. That's right, hour 2 of Balance of Power starts right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The Secretary of Defense talks retaliation at the Pentagon. Welcome to the fastest show in politics as Lloyd Austin holds a late scheduled news conference to promise multi-tiered strikes in response to the deadly attacks on U.S. troops in Jordan, while also apologizing for the way he handled his prostate cancer surgery. We'll look at options for handling Iran straight ahead with a voice of authority. Michael Allen of Beacon Global Strategies is with us. New polling meantime out today from South Carolina brings bad news to Nikki Haley. We've got new fundraising totals and analysis from our panel. Bloomberg Politics contributor, Democratic analyst Jeannie Shanzano is with us, along with Republican strategist Lisa Camuso-Miller, former RNC communications director. It's all ahead this hour after a look at Wall Street. Let's bring you up to date on trading first with Charlie Pellet in New York. Hey, Charlie.
Hi, thank you very much, Joe Matthew. Higher across the board right now. Gains for the Dow, the S&P, NASDAQ 100 index, Russell 2000 as well. Solidly in the green. Just getting word that Goldman Sachs, Bank of America, and Barclays all throwing in the towel on a March rate cut. They now have their sights set on May. Right now, the S&P up 41, 48.86, gain there of 0.9%. Dow Jones Industrial Average up 265 points. That is a gain now of 0.7%. NASDAQ, the composite index, up 141, up 0.9%. The NASDAQ 100 index up now by 0.8%. Big tech earnings after the close of trading. Bloomberg will have you covered with all three of these. We'll be hearing from Apple, Amazon, and Meta. They're all higher right now. Amazon up 1.5%. Meta Platforms up 1.4%. Shares of Apple, they're advancing now by 0.8%. 10-year again at 3.87% with a 2-year 4.20%. Gold up $15 the ounce, up by about 0.8%. And crude oil now slumping 1.7%. West Texas Intermediates 74.52 a barrel. Cannot ignore Peloton Interactive shares today. They are plunging 21.5%. The company says it does expect to record another sales decline in the current quarter. So again, recapping, stocks are advancing. Big tech earnings Thursday. S&P right now up 40, a gain there of 0.8%. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
All right, Charlie, thank you. Welcome to hour 2 of Balance of Power. I'm Joe Matthew. Live from the nation's capital, Kaylee Lyons is off today as we dissect news from the Pentagon in a late scheduled news conference. Happened late this morning with not a lot of notice. Lloyd Austin in front of reporters standing for the first time since his visit to Walter Reed. Of course, he had an extended hospital stay following complications that were tied to prostate cancer surgery. He did apologize for that. He apologized to the president and to the American people for the lack of communication surrounding his stay. But he also spoke to what was anticipated to be an announcement. It wasn't really so much of retaliatory strikes following the deadly attack on U.S. forces over the weekend in Jordan. He did promise multi-tiered strikes, and we've heard this line before from the Pentagon and from John Kirby at the White House at the time of our choosing. But there is reporting more deliberately from CBS News today that plans have in fact been approved for a series of strikes over a number of days against targets, i.e. multi-tiered, as the jargon indicates. They would include Iranian personnel and facilities inside Iraq and Syria, not to be confused with Iran itself. And that's where we start our conversation with Michael Allen, Managing Director, Partner, Beacon Global Strategies, who's had a long career in national security, including time in the national security apparatus in the White House, 2007 through 2009. It's great to see you, Michael. Thanks for being here.
Thank you for
having me. Are we going
to
see military action tonight?
I think it's tonight or tomorrow night. As I understand it, it's weather dependent. But I think it's time for the United States to go ahead and take the strikes. The clock is ticking. They took a hit at us, of course, over the weekend. And I think it's part of reestablishing deterrence against Iran that we're able to swiftly try, anyway, to put them back in their place. I'm a little worried that we've telegraphed the punch so much that a lot of the Iranian Revolutionary Guard figures have gone back home by now.
What do you make of that? Was this leaked on purpose? Is there some telegraphing going on here, or is the Pentagon talking in a way that it shouldn't be?
I think they are telegraphing. They did it against the Houthi strike. They've done it previously. I think in their minds, they believe it's a way to de-escalate the crisis. But
isn't that something?
But to me, what they need to be doing is trying to reestablish deterrence, which would say, let's do something swiftly and overwhelming, not to cause a war, but to cause a change in the calculus of the Iranian leaders to where they say to themselves, you know what? The United States isn't messing around anymore. If I'm on the receiving end from European powers or whomever of a warning, hey, a shot's coming, we don't want to hit your people, maybe just your equipment, I'm thinking to myself, okay, I'll batten down the hatches tonight, but right back at you tomorrow.
So why not strike Iran directly? Why not sink the Iranian Navy to make a point?
So I think that would be a disproportionate response. I'm sort of in favor of a disproportionate response to reestablish deterrence, maybe not inside of Iran proper. Maybe we save that for a later
because that would draw another disproportionate
I think
response.
It would be incredibly escalatory if we hit inside of Iran, especially when we've got so much else going. I mean, I'm not unalterably opposed to it. I would want to understand what the targets were, and perhaps if they were IRGC intelligence facilities, it would remind me more of President Reagan hitting the intelligence services in Libya, and I would get more comfortable with it. But yeah, they need to lean forward a little bit. I think a thesis of the administration is overcaution. They're overcautious in what arms they give to the Ukrainians, and they're being too overcautious when we talk about the Iranians.
So with what we know, if it is in fact striking targets within Iraq and Syria, are these airstrikes? Are they cruise missiles? What would be the menu of options here the Pentagon's looking at?
I think all of the above.
Yep.
Certainly a few cruise missiles, but I think they will definitely put some F-16s and other munitions type in there.
Being launched from allies in the Middle East.
We have
From
plenty
Jordan.
of bases, plenty of places over there.
Qatar?
I think we have Qatar. We've got even places in the UAE.
And would we be then drawing them into this?
I think we would have to get their permission in order to take off from those bases and make sure they're okay with it. I think they would be okay with it. But speaking of permission, I mean, it's if we hit inside Iraq, generally, we're supposed to at least talk to the Iraqi government about it. I don't think we did a few weeks ago, which is part of the reason why the Iraqi government wants us to move out, or we're beginning discussions on how to move out the troops. But that has that'll be an interesting story tonight. Did we hit inside of Iraq, and did we get permission, or did we just do it?
With that said, talk to me about this place, Tower 22.
Yeah.
It's in a critical location, essentially the intersection
of all three countries, Iraq and Syria and Iran. That wasn't by accident that it happened there, was it?
It wasn't by accident. I think they thought that this would be a less protected facility because we, the United States, probably saw Jordan as a safer place to be, certainly compared to Syria, which is just generally lawless and dangerous. But, you know, this is where I wish the president, not as a Republican or a Democrat, but would iterate what is the national interest? Why do we have these troops in Syria in the first place? And the reason is it's ISIS and the rise of terrorism. We don't want them to come back and be able to reestablish such a power to be able to hit us back in the United States again. Tower 23 was there to help support that mission inside of Syria. So I hope tonight, if the president addresses the nation around the time that the strikes are launched, he'll make it clear to everybody that, hey, this is part of a U.S. counterterrorism mission. We aren't there just for fun.
Yes. So this should be coupled with a presidential address, in your view?
I think so,
definitely. Are you hearing that would happen, or you just think it should happen?
I think it should happen.
I don't use the Oval Office as a venue very often. Does this justify it?
I think it does. I think this is a significant escalation by Iran when they've killed 3 soldiers. I think he has to lay out our strategy. Again, I worked for President Bush, but I think even Democrats appreciated it in the second term when he would go out and explain the Iraq policy, even if they didn't agree with it. You have a duty to tell the American people, and I hope Biden does that tonight.
Yeah, it's interesting. He's going to be flying around the country here a little bit, but he would be back in time to address the American people. And it does seem like it would be a time to follow up on his address about Ukraine and Israel.
That's right.
It's another dangerous world speech for this president.
We have a lot going on. I know we're all eager to, as we say, pivot to China because they are the big threat over the next generation. But we keep getting pulled back in, to use the phrase from The Godfather, into the Middle East and, of course, into Europe. World wars start in Europe, which is why we need to do a better job and get over our misgivings about funding the Ukrainians. But we also need to be more serious about trying to put Iran in a box. Doesn't have to mean war, but they need to know that we have a backbone here so that they'll slow down on their nuclear program and slow down on their proxy terrorist warfare in the region.
The Islamic resistance in Iraq is said to be responsible for the attack in Jordan. There are at least a half dozen proxy groups we're talking about here. You suggested that we need to do something to make a point. Can you make a point by going after the legs of the octopus here and not the head?
I don't think so. So I think among the strikes tonight, I'm fine with all these proxies, and I do believe that we need to, as some people unfortunately call it, mow the grass a little bit, degrade their capabilities. But I think you've got to have an eye in front of one of these strikes. And for me, that's the IRGC. Okay. That is the terrorist sponsor. They're the ones that deal externally from Iran and sponsor Hamas, Hezbollah, the Houthi, and of course, all of these popular mobilization fronts that are in Iraq. And those are the people we need to go after, and they need to understand that the United States can hit them and that we're serious about doing it.
And then the next day, the Houthis attack another ship.
We have to keep staying in the fight there. There, I'm more comfortable with a longer-term campaign that just degrades equipment
in Yemen.
In Yemen, sorry. Yes, absolutely, in Yemen, because I do believe that if we don't try to keep the international waterways open, no one else is. And even if we may not have a ship that's going directly because they're going up the Suez Canal, I think nonetheless that's the role of the United States for now.
All the while, we've got a hot war in Gaza. A prime minister doesn't seem to want to take advice from the United States right now. They've at least acknowledged now that they've begun flooding the tunnels beneath Gaza, Hamas's tunnels, with seawater. And we're getting an eye roll here on talk of a peace deal. You made the point, we're spinning a lot of plates right now. The Secretary of State said this is a dangerous moment for the Middle East. Are we focused enough on what's actually happening inside Israel and Gaza while we try to deal with the rest of the region?
I wish we would give a little bit more time to the Israelis to finish the job in Gaza. I understand that things are controversial. I understand there's been an unfortunate civilian loss of life. But they've just gone through their equivalent of 9/11. We would not have listened to people telling us that we can't go after al-Qaeda in Afghanistan or wherever the case may be. I think, honestly, they need another month or so before they shift over to a over-the-horizon counterterrorism special op raid type of situation. You're right. BB is not listening to Joe Biden, but I think Joe Biden also needs to understand a little bit where they are.
You served as Majority Staff Director of the House Permanent Select Committee on Intelligence. You've been on both sides of Pennsylvania Avenue. The president's asking for help. The supplemental budget request for Israel, for Ukraine, for Taiwan. It's been bogged down into a border debate. Is that how this ends, or will there be a new approach from the Lindsey Grahams of the world and some of the others to get a standalone funding bill for Ukraine as well as Israel?
I'm glad you mentioned that, because I think that's what Senator McConnell has been signaling for about a week, which is that, it was the border language that was going to pull Ukraine funding across the goal line. Now I think it's a better chance that the border language would delay the Ukraine funding. If I'm the leader in the Senate, Schumer and McConnell, I just go ahead and try and throw it over to the House.
Send a supplemental.
And let
get them on the
pressure
record.
build. There's some unforeseeable event that I can't come up with right now that might happen in a month or two. Maybe Russia does something dramatic, maybe pressure increases, but then the House of Representatives then feels the pressure to go ahead and let it through. I would put the pressure on them and go ahead and pass it. It needs to get out of the Senate. Something big needs to happen. We've let it sit there too long, and that's why everything has been delayed.
You've spent a career in national security. Does it make you nervous when focus is trained so heavily on one part of the world, knowing that a Vladimir Putin or someone else, a Kim Jong-un, could really take advantage of a moment like this?
It does. Kim Jong-un, it's good that you mentioned North Korea. Almost no one talks about it. He has gotten more aggressive of late. He sort of changed the defense doctrine how he looks at the world. Not so much, hey, I'm just going to try to get along peacefully with South Korea, but I want to reunite the peninsula. It's not that he's going to do it, but he's building capabilities everywhere. And honestly, we here in Washington don't have a great idea or a great new policy to roll out how to deal with them. It needs to be managed, maybe more sanctions, maybe more deterrence, but there are problems everywhere, and we have got a lot that we need to follow and do well on and execute so that our national interests are protected.
With the Ukraine that's running out of money, even if we get this together, maybe to your point, there is a new effort and a standalone piece of legislation that funds our allies in Kyiv. Vladimir Putin has got to be seeing an opportunity right now. What's going to happen next? What concerns you the most?
What concerns me the most is that Vladimir Putin is going to get this entire year to reconstitute his military. We've already seen plenty of articles about how they've been able to stay afloat through more manpower that they've basically kidnapped off the streets and shipped over to Ukraine, but also their capability, their defense manufacturing is starting to go back up again. So I think we're giving Putin a whole year, if we don't pass anything, to let him rebuild and retrench and reestablish his force so that he might be able to move westward again next year. So that's why another reason why we need to get this Ukrainian funding done as soon as possible.
Are you surprised that the White House, with the help of Mitch McConnell, has not succeeded in making the argument, the national security argument for the United States when we talk about Ukraine? You hear not another dollar for Ukraine, our borders before their borders is kind of the refrain from the Freedom Caucus types. Despite deliberate messaging, classified briefings, they don't seem to be breaking through.
I am surprised because I think we're losing our way. I don't know if it's populism. I don't know what it is. But we all know here in the age of geopolitical competition that Russia is our number 2 adversary. And if anybody in the national security community had been approached 3 years ago and said, if you want to pay 2.5% of your annual defense budget and we will degrade the Russian army by a year, 2 or more, and force them to bring out tanks that were from World War II, would you take that deal? You would say, absolutely. They'd be like, I don't even know why you're asking me such a ridiculous question. But of course we should do that, not because we have just some ancient beef with the Russians and the old Soviet Union, but because it's in our national interest. And I wish the president would step forward and articulate national interest reasons why we need to stand tall.
Michael Allen, great conversation. Thank you for being with us. A voice of experience when it comes to national security that we wanted to bring to you here on Bloomberg. Thanks for joining today, and stay in touch as we work our way through this. By all means, I'm Joe Matthew in Washington with much more to follow. We'll assemble our panel next. Jeannie Shanzano and Lisa Camuso-Miller with their take on the news today, including the latest from the campaign trail. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet, 1:21 the time now on Wall Street, and we begin with an update on the Immerse Sports IPO. They began trading at $13.40 a share. Right now, just above that level, little change. The ticker symbol AS right now at $13.44. Immerse Sports brands, by the way, include Wilson tennis rackets and Solomon ski boots. Stocks higher across the board right now. A rally in some of the world's largest tech companies sent stocks higher. Traders are awaiting earnings after the bell from a trio of mega caps. Right now, we have got Apple shares up 0.8%, Amazon up 1.6%, Meta Platforms up by 1.5%. All three again report after the close of trading. Bloomberg Radio and Television will
have complete coverage. We'll be all over these earnings as they break. S&P right now close to the best level, up 40 points, 48.86 after yesterday's sell-off. Right now looking at a gain of about 0.8% in the S&P 500 index. The Dow higher now by 252, up 0.7%. The NASDAQ Composite Index up 0.9%. 10-year at 3.87%, 2-year 4.20%. Gold up 0.7%, 20.54 the ounce, and West Texas Intermediate crude down 0.8%, 75.25 a barrel. Elon Musk is moving ahead with a plan to move his company's incorporation from Delaware to Texas. Musk plans to summon Tesla shareholders for a vote on shifting the company's incorporation after a judge voided his $55 billion pay package. Recapping, stocks are higher right now with the S&P 500 index up 39, up 0.8%. I'm Charlie Pellet. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, we thank you and welcome to Balance of Power Thursday edition, live from Washington. I'm Joe Matthew. Kaylee Lyons is off today with new numbers dropping in South Carolina that may not make it feel like home sweet home for Nikki Haley. Bittersweet may be a better term. We've been waiting weeks for these numbers. The last credible survey was the 5th of January, and of course, a lot of water under the bridge since then by way of Iowa and New Hampshire. This new polling finds a near 30-point spread for Donald Trump, leading Nikki Haley. A Monmouth University Washington Post poll, 58 to 32%, suggesting that South Carolina may well be Nikki Haley's last stand. Lisa Camuso-Miller, former RNC Communications Director, Republican strategist, joined today by Democratic analyst, Bloomberg Politics contributor Jeannie Shanzano. Lisa, what does this mean for Nikki Haley? If she loses by that much in her home state, how does she stay in this race?
Well, Joe, I mean, I mentioned a little bit earlier, I think it's possible that Nikki Haley sees this as a way for her to at least sort of keep the conversation going, right? So even if she's not successful in South Carolina, I suspect it's time for her to step away, especially because the donors won't be staying with her. But the other thing, too, is that people really are looking for another option other than Donald Trump and Joe Biden. And I think Nikki Haley sees herself as a possibility to continue to upset and to continue to keep the conversation going in the primary. Mm-hmm. So it'll be interesting to see what happens. I'm not sure she stays in because I'm not sure she wants to lose in her home state. I mean, she has such a proud record of being successful that it strikes me that regardless of all of that, if you're Nikki Haley, why would you want to walk yourself down that pathway?
That's the unquantifiable part here, right, Jeannie? We can talk about hanging in there till the convention, just raise enough money to stay alive, and she did better than just enough, $17 million, as we learned in the last quarter. She starts this year with $14 million in the bank, but losing by that much at home could have an effect, a psychological effect that makes it impossible for her to carry on, no?
That's right. You know, really difficult for a candidate to lose in their home state by those numbers if the polling pans out. And we should say we are still 3 weeks away. It's perennially difficult to poll primary races. To your point, this is the first credible poll we've seen in a month. Numbers didn't move in her direction, but it's the first credible. So potentially something could change, but it would have to change an awful lot. And so hard for a candidate to lose in their home state. And let's not forget, also hard to be cast as somebody who is working on behalf of the Democrats. You know, she is a tried and true Republican. She always has been. You know, this is somebody who is now being cast as anti-Trump, anti-MAGA, anti-Republican, and in the camp of Joe Biden. Really, really tough to continue with that. So if she does lose, it's going to be hard for her just emotionally to do it. But if anybody can, it's Nikki Haley. And, you know, we must say, this is an unusual election. There's a reason to stay in. This guy is facing 91 indictments. He may not be there by the time the convention rolls around. So if she's competitive, there is a school of thought that says we need somebody on the Republican side in there if he potentially is convicted, you know, and potentially facing jail time.
Mm-hmm. Lisa, this poll was taken after New Hampshire, after both Iowa and New Hampshire. And when you look at the favorability ratings for Nikki Haley, they're dropping here to 45%, down from 59% in September. Trump's went up slightly to 66%. How much of this is the voter simply looking to pick a winner? We want to align ourselves with a winner as opposed to a set of policies.
Yeah, I think that that's a big part of it, Joe, is that people really feel like the race is already over. And so if they're going to make a choice between one or the other, they want to be with the winner. To me, though, I think the whole point behind Nikki Haley and the fact that she continues to raise money and she continues to really sort of narrow her focus in on Donald Trump, calling him out to debate, I think she makes a very fair point. The Republican voters in my home state of New Jersey, for instance, they would really like to have a say as to who's going to be the nominee. It's going to be Donald Trump, but to Jeannie's point, it's going to be interesting to see if these indictments continue to unfold in a way that we think that they will, and making it more and more difficult for Donald Trump to actually be the candidate for the Republicans.
Filling in the blanks here on fundraising, I'd love to hear from both of you on this. Donald Trump, we know, is laying out a lot of cash for lawyers last year. That $50 million figure was confirmed. His 5 political action committees together spent $210 million over the course of the year after raising about $200. We're bleeding money in this campaign, Jeannie. How long can this continue, or does it not matter for the king of free media?
You know, Donald Trump has been able to make this work so far, but obviously you don't want to be spending more than you're taking in, nor do you want to be spending a whopping $50 million on attorneys. But that said, you look at these poll numbers, and this is the confounding part of this. This seems to be working for him. But I would say so far, we are so far down in uncharted territory. We pay an awful lot of attention to these races, but 40 voters in 48 states haven't even been able to vote in the primaries or caucuses. The election general is not even till November. So when people start to wake up to this and the spending he is doing on attorneys, does that change their mind? It's hard to know, but so far it's worked for him. He's just got to be very careful about so much cash that Biden is able to spend heavily in the end, and he is unable to match that.
Well, I'll tell you what, Lisa, Joe Biden's got the money. He may not have the polls, but he's got the cash. His campaign and affiliated committees, including the DNC, raised $97 million in the last quarter. They start the year with $117 million in the bank. The list of donors is remarkable. Among the top donors to the campaign, Steven Spielberg and his wife, Kate Capshaw, over $900,000 each. George Soros, Eric Schmidt, Shonda Rhimes, who created Grey's Anatomy. Is there a narrative here for Republicans to talk about big money coming out of Hollywood as opposed to grassroots fundraising?
I mean, yes, there is, but also too, there's some wrong-headedness in all this too, Joe. The fact that the Republicans are taking on Taylor Swift, the most popular star on the globe right now, to me, has me scratching my head. So as much as Donald Trump continues to raise money, he's raising small dollar donors, right? These are people that are invested in this campaign. They believe that he's being mistreated. They believe that he's been maligned. Yep. And that's kind of the contrast between his campaign and his effort in fundraising and Joe Biden's fundraising efforts, which are coming from people that are perceived to be already profiting and doing well it's a contrast. And that's really sort of the rub with this MAGA wing of the Republican Party, is that they look at that and they shout from the rooftops that that's not the way the government's supposed to work. But also too, I don't understand sort of the philosophy and the thought trail behind attacking people like that, because we still really love our pop stars. I mean, those are the kinds of things that keep us smiling every day. If we spent all day long focused on politics, my goodness, people would maybe understand better what we do for a living, but it's really difficult to understand how that becomes the narrative. More importantly, I think, Joe, though, is that there are small dollar donors that are continuing to donate money to Donald Trump, and they will continue to do that because they feel as if he's been mistreated. And that's the difference between the dialogue between the two campaigns.
And they believe in that cause. Those $35 checks, Jeannie, tell a great story for Donald Trump, whether or not he's spending them on the lawyers as opposed to getting, a $900,000 check from Steven Spielberg. I'll take the bait here. Lisa, I haven't brought it up yet. Jeannie, what do you think about Lisa's idea? Because I keep reading that Taylor Swift is going to be the most sought after and important endorsement in this election cycle. Is that coming for Joe Biden?
It very well may. I have to go on record. I am a Taylor Swift fan myself. Joe, Lisa, I would ask you, but I don't want to put you on the spot. We know that she has endorsed Democrats in the past. It wouldn't be a surprise. This all came up because it was leaked to the New York Times that they were going after younger people in the social media sphere and elsewhere to endorse. So of course they would love her endorsement. Who knows what she will do? We do know where she will stand in terms of her endorsement on football teams in the Super Bowl, though. So I can at least say that she's probably not going for the 49ers.
Well, I don't know if this is actually going to happen here. I suspect it'd be a big headline if it did, Lisa. I'm pretty sure you're a Springsteen fan. In our 30 seconds remaining, would it actually help Joe Biden? We're told endorsements don't matter.
Oh, man, I'm a Swiftie. I'm all in, Jeannie. I love her to pieces, and I'm sick of watching people beat her up. But I will say, too, this, Joe, I actually watched the documentary and some of the work that she's done. She actually has sort of said that she feels it's really important for her to come out and make it clear where she stands on these issues. If you're her, though, like, why get in the fight? Why get it? First off, let's get the Super Bowl behind us. But let's see what happens. I do think endorsements like that help. I do think that, but the rules no longer apply because Donald Trump has really sort of changed the tone and the tenor of how these races really go. So just as Jeannie said earlier, we're kind of in uncharted territory, but I do think that any endorsement, especially by someone as popular as Taylor Swift, would certainly be something that would be helpful to the candidate.
The rules no longer apply. Great conversation. Lisa Camuso-Miller and Jeannie Shanzano. We want to get you up to date on world and national news now. Thanks to you both. Nancy Lyons joins from the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. U.S. Defense Secretary Lloyd Austin admits he did not properly handle notifying officials about his prostate cancer surgery and 2-week hospital stay.
I take full responsibility. I apologize to my teammates and to the American people.
Secretary Austin says the diagnosis of prostate cancer was a gut punch. There were an estimated 20 million new cancer cases, close to 10 million cancer deaths in 2022. That's according to new estimates by the World Health Organization. New projections for 2050 have also been released. The majority of diagnoses are expected to be in low-income countries, with mortality seen as doubling. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, NASDAQ solidly in the green right now. Big tech earnings after the close of trading today. We will be hearing from Amazon, Meta Platforms, and Apple. Shares of all three are advancing right now. We got Apple up by 0.6%. Amazon up 1.3%. Meta Platforms doing a little bit better, up now by 1.4%. Dow Industrials up 214, up by 0.6%. S&P up 36 at 48.81 for the S&P, a gain right now of 0.7%. We've got the NASDAQ Composite Index up 124, up 0.8%. 10-year at 3.86% with a 2-year 4.20%. Gold up $18 the ounce now, up 0.9% at $20.58. West Texas Intermediate crude down 0.4%, 75.60 for a barrel of WTI. American Express and Delta Airlines are revamping their co-branded credit cards to offer new rewards and benefits that target both frequent flyers and everyday spenders who frequently charge meals at restaurants and trips through rideshare services. First day out for Immerse Sports. They began trading at $13.40 a share. Those shares are higher now. Right now, Immerse is at $13.52. Its brands, by the way, include Wilson tennis rackets and Solomon ski boots. Recapping stocks higher. S&P up 35, up 0.7. I'm Charlie Pellet. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, thank you. Appreciate your being with us today. Welcome to Bloomberg's Balance of Power. I'm Joe Matthew in Washington. The president has left the bubble on his way to Motown. It's Detroit today for Joe Biden for what's billed as a political event on the official schedule. And of course, just comes days after Joe Biden received the endorsement of the UAW. But just last night, Donald Trump was talking to Teamsters members, setting up an interesting dynamic here between Joe Biden, the self-professed most union-friendly president in history, and Donald Trump, who actually won the rank-and-file union vote in the last election, making us wonder how this could break this time between the leadership and the rank and file. And joining us to talk more about this, Saleha Mosin, Bloomberg senior Washington correspondent, host of the Big Take DC podcast. Saleha, it's great to see you. We know that union membership is near an historic low. So why are these two guys fighting so hard over it?
It's really interesting, Joe. The membership really likes Trump, and there's a lot at stake because we have companies like Japan's Nippon Steel wanting to buy United States Steel Corp, and that's going to affect how union voters and these members will be taking home pay, what their job prospects will be going in the future. At the same time, you've got Biden courting them, and the UAW president, Sean Fain, who's really influential. We heard from him on the Big Take DC podcast earlier this week, and he is supporting Biden, saying that it's a Biden economy that's going to be better for us over the next 4 years. This is a large constituency. Yes, their membership is falling, but it's still really, really high, and it still represents a vast swath of the people in the Rust Belt and heartland of America, and how those members and those families feel about how the economy is going.
Yeah, and we know from our own polling here at Bloomberg News with our partners at Morning Consult that Michigan remains a sore spot on the list of swing states that will decide this election. Saleha, you point out something really interesting. Nippon Steel. Donald Trump says he would absolutely block this deal, the deal with U.S. Steel. And I wonder if that's a more important message than Joe Biden putting on a union T-shirt and walking a picket line.
Absolutely. Trump is speaking their language, saying that he would block that deal from Nippon Steel instantaneously. That's the word that he used. So let's see what Biden says when he lands in Michigan to the same voters.
That's for sure. What's the message today then for Joe Biden? You know, he's been talking about EVs. He's been talking about a lot of things that the rank and file may not necessarily be interested in hearing about, knowing as well that when it comes to economic policies, he's not clicking with voters in Michigan.
Absolutely. Those voters are worried about how they can make ends meet, what's going on at the grocery store checkout, and they're not seeing any results from Bidenomics. And so they're wondering, do we want another 4 years of this, or do we want the guy that they had before, where when the economy did happen to do well, and yes, there's some nuances there, but he's making some big promises.
I'm going to ask you about what you have coming up on the podcast, dropping today, Saleha, but I have to ask you, having seen South Carolina polling numbers today, Are you looking at this as a general election campaign that's already underway, or do you want to see what Nikki Haley does in the next couple of weeks?
100%. I think the general election has kicked off pretty much since Iowa. We have kind of held out to see if polls were different than what the people were going to say with their actual ballots. And we're seeing that polling has really been accurate so far, that voters in the heartland are really leaning toward Donald Trump, even amongst just the GOP candidates.
We certainly heard that refrain on the ground in both states. Saleha, we've got a lot to talk about here in Washington as well. There's so much unsolved on Capitol Hill. What do you have coming up on the Big Take DC podcast?
Joe, this week we talk about the debt spiral that is at hand, and it is considered unsustainable, according to CBO, Congressional Budget Office's director, Philip Swagel. He came on the show with me, the Big Take DC. You can download that on Apple, Spotify, and other places. He talked about how we are in a debt spiral because our annual debt load is so high that the interest on that debt load will very soon be larger than our national defense spending. So we're going to be spending so much money just managing the debt, trillions, that we're going to be outstripping what we pay for military and defense costs.
We heard from Philip Swagel at the CBO. Let's listen.
When we have higher interest rates, more debt, we pay more in interest, and then that builds back into the debt, which leads to yet higher debt and higher interest payments.
So it's a spiral.
We are in a spiral now. It's a slow spiral, but it's still a spiral of rising debt and rising payments on the debt. The situation is unsustainable.
It's unsustainable. And we can't even pass a tax deal, it seems, here. It passed the House last night, Saleha, but it looks like it might crash into the rocks in the Senate for a whole bunch of reasons. We haven't figured out a budget. By the way, the government will start shutting down a month from today if we don't get that done. The CBO director must be pulling his hair out.
Absolutely. And this is a great episode, Joe. Phil and I sat together. We talked about Lin-Manuel Miranda. We listened to some of his tunes from Hamilton and how Alexander Hamilton in 1790 talked about how debt is the price of liberty, but maybe now Congress is taking that a little bit too far. And I also chatted with my colleague Liz McCormick. We talked about the Sopranos and the mafia connection to how debt interest cost is kind of like the vig that the mafiosos used to ask for, or maybe they still do ask for from people who are loaning them money. And so we can connect that all to how Congress is still fighting. They can't get a handle on things. They're kicking this can down the road.
Well, I like the theme here, and we keep hearing about the 5 families in the Republican House. Are you trying to connect the dots on this?
Oh, I won't do that. I'll let listeners do that.
Fair enough. So, Leah, what are we going to be watching here in the next couple of weeks? And a Congress that's about to take a 2-week recess. As I mentioned, we have to fund the government. It looks like a border deal could be in great jeopardy here. But there are other things hanging out there when it comes to FISA, the FAA, and you start to wonder if this Congress is truly broken.
Yeah, we have a Congress who last year they passed the least number of bills in decades, maybe in history, at least in recent history. And now we have President Biden saying that he's going to solve the border policy, yet Christmas break comes, New Year's break comes, then we have the House on recess in a couple of weeks. Nothing's really moving, but I guess a lot of stopgap bills are being signed for the shutdown just to kick that can down the road. And that's also affecting how the border policy is going to be resolved. And that's a really big issue. The poll that you mentioned that Bloomberg did with Morning Consult has highlighted that for Biden, border policy is a key sticking point in winning some votes from the electorate.
Well, I'll tell you what, we're looking forward to listening. The Big Take DC podcast drops today. Saleha Mohsen at the helm. It's great to see you, Saleha. I understand we're going to start doing this on the regular, and I look forward to the conversation weekly here on Balance of Power. I'm Joe Matthew in Washington. With more to follow, Mike Dorning is going to join us from the Bloomberg newsroom with an eye on Capitol Hill, some of the same issues we're discussing here with Saleha. They passed a tax deal, bipartisan, bicameral, and even that doesn't seem to have as much hope as we thought. We'll have more ahead on the fastest show in politics. This is Bloomberg.
This is Balance of Power with Joe Matthew on Bloomberg Radio.
The vote pretty encouraging, 357 to 70. Hardliners on both sides said no. That's the definition of compromise, right? Another late night as the House passes this tax package, $78 billion. More business-friendly tax provisions coupled with an expansion of the child tax credit. Everyone goes home happy, except they're not. Interesting headline that something actually did clear the House, but we have trouble in the Senate, where many Republican members are concerned about the child tax relief provisions here. They think it might discourage recipients from going to work. Progressives have trouble too. They don't think that it goes far enough, the child tax credit. And so there are concerns now when you couple that with a very challenging calendar that this also may not see the light of day in the Senate. And that's where we start our conversation with Bloomberg Politics reporter Mike Dorning. Am I framing this fairly? Because you had an impeachment of Alejandro Mayorkas, a couple other things like a 2-week recess, and where's the tax deal?
Yeah, no, it's amazing that you can get something with this kind of bipartisan oomph to it in the House, and now you have the problems in it. But one of the problems here underneath it all is this would be like helpful to the economy in an election year. So there's a partisan consideration that maybe you don't want to lift up the economy in an election year, even though it's going to be relatively small in a, $21 trillion economy or something. We're talking $78 billion.
Sure, yes.
It would still mean low-income Americans would have, particularly low-income Americans with large families, would have a little bit more in their pocket, and it would mean that large manufacturing companies would have more money to invest in their capital improvements.
Yeah.
So you get one Republican thing, one Democratic thing, but it also would kind of lift up the economy in an election year.
It's got something in common with this elusive border deal that we still have not, by the way, seen the text of, in that it might be smart politics for Republicans to not want a deal here in an election year. You know, Donald Trump says, no deal, we want to run on immigration. In this case, Chuck Grassley says it out loud.
Yeah.
That passing this bill would make Biden look good in an election year.
Yeah, no, and that is historically often a problem in a presidential election year. A rare exception to that was in 1996 when Bill Clinton and the congressional Republicans made a lot of deals and got a lot of stuff done, and then lo and behold, the congressional Republicans did well and the Democratic president did well, but the congressional Democrats didn't do well and the Republican candidate for president didn't do well. So if you're Donald Trump, that's not necessarily the plan you want.
Yeah, so it makes you wonder if the store's closed. I mean, if we can't get this tax deal passed, how does anything else happen?
Yeah, it's hard to do, and that's why, you know, a lot of the sort of crotchety old congressional and political reporters in Washington don't really expect much out of Congress in that final year of a presidential election.
Sure.
Here, at least it's early in the year. It's not too big a tax deal. It would help some low-income people and some capital-intensive or research-intensive domestic companies, but it's constrained. And the same thing with the border. There you've got a real problem where maybe, you know, Republican governors on the border would like to make some progress on immigration, and it might be worth it.
Boy, the government set to start shutting down. It's a two-pronged approach here, laddered shutdown 1 month from today.
Yeah.
Is that going to happen, or does Mike Johnson put his career on the line with another stopgap?
Well, I think what we've seen is that Mike Johnson has shown he wants to try to avoid that, and he's correctly calculated that that would be damaging for congressional Republicans.
The CR.
A shutdown.
Yeah, got it.
That
Okay.
would
So the
damage
CR
their
is
reputation.
coming. They're not going to get a budget done in the next month, are they?
I don't know. I mean, it looks hard to do given the amount of time, and they're taking a big vacation this month, right in the middle of it all, and it's kind of a tough thing to do.
Not a chance.
So the odds are low, but I do think that Johnson has shown his colors that he wants to avoid a shutdown if possible, and Biden certainly wants to avoid a shutdown if possible.
So he'll be delivering the State of the Union on schedule.
I think that's likely.
Yeah. Good to see you. Mike Dorning, with us here at Bloomberg, political reporter on Balance of Power. It's good to see you, Mike. As we turn our attention to New York, it's almost time for Bloomberg Business Week. Carol Massar and Tim Stenivek standing by for the conversation. Carol, what do you have coming up today?
Hey, listen, it's all about the megatech companies that continue to report all week, Joe, and I'm thinking about Apple and Amazon and Meta. I mean, these are big ones, and there's been some disappointments among what we heard so far this week, right, Tim? And so we're wondering, especially like maybe Amazon, there's a lot of pressure on this one. Do they deliver and maybe change kind of the thinking here and the trend in the market? Although they're up today.
Yeah, I guess, Tim,
interesting.
what's your thought on this? Like, we're priced for perfection, so any miss is severely punished. That's just the environment we're in.
Yeah, I think that's absolutely right, Joe. And look, analyst expectations are really high. Investor expectations are really high for anything related to AI right now. So they want to actually see these companies actually have some numbers when it comes to the innovations that they've been saying they're talking about and the reason these stocks have been bid up so much of late.
I love, by the way, hearing you guys, like 4 o'clock hits, there's nothing more fun than hearing you guys tear through a balance sheet and an earnings statement because it's real time and people are making decisions based on what you're saying.
Hey, Joe, I want to know, was Mike Dorning talking about crotchety reporters or members of Congress? I'm not sure whether I heard it right.
That was reporters, by the way. I did not look him right in the eye when he said that. I have no idea who he's talking about.
Hey, listen, guilty as charged.
Here. By the way, we'll take that as a compliment from the great Mike Dorning. We're listening big time after the bell. Carol and Tim with a lot to follow here on Bloomberg TV and radio. I'm Joe Matthew in Washington. I'll meet you back here on Balance of Power at 5. Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar.
I love looking at different things that are going on in our economy. The Fed president's kind of battled it out about what's going to happen next.
And Tim Stenivek.
This story really struck a chord with me. The cost of education. Consumers are out there spending money. They have jobs, and they're continuing to spend money.
On Bloomberg Radio.
And a very good afternoon, everybody, live on Bloomberg Radio and television. We're on YouTube. We're on Bloomberg Originals. You know who they are. And that trio of Apple, Amazon, and Meta who report after the closing bell today. Tim, they're all trending higher.
Yeah, NASDAQ 100 are now up more than 0.8%. We'll see what they bring a little later in the program. Also, Carol, we know what the Fed did yesterday. What about the after effects? We're going to talk about the Fed one day later as jobless claims show the U.S. labor market cooling, even as we workers are being more productive.
Yeah.
Although, did you hear what Jay Powell said yesterday about people who are working from home?
What did he say?
He said it doesn't seem to increase productivity.
It doesn't seem.
It doesn't seem to.
But we're more productive.
Yeah, that's true. That's true.
Sorry, Jay.
All our eco rates roundtable is going to cover all of this.
Yeah, indeed. We've had a good day to think about all of this, and got some new economic data points. So we'll put our team through a little bit of torture about where rates go and how the economy is doing. Hey, speaking of torture, it's hard to imagine that here we are still getting ready for a third year, I should say, of war between the U.S. and Ukraine. Some critical EU aid coming to Ukraine. So we're going to get into that. And also something that's been on our radar, Russia, a new push to expand its influence elsewhere in the world. This is a story that's got to be on your radar.
Okay, a little bit of a lighter note, too. No more Taylor, no more Drake, no more Dylan. We're talking about TikTok and Universal Music as it begins pulling music from the TikTok platform. That has become one of the most powerful forces in the music industry over the last few years. But they're not showing the music companies the money.
No, exactly. Those two giants at battle. So we're going to get into the details of that. First up, though, let's get you going on what's going on in the markets on this Thursday. Here is Charlie Pellet.
Hi, thank you very much. Happy Thursday. Going to be a very busy day for us after the close of trading. Three of the biggest. We're going to be hearing from Apple, going to be hearing from Amazon, going to be hearing from Meta. And you know what? Bloomberg Radio will have you covered. Bloomberg TV as well. We're going to be all over these earnings as they break. Right now, we've got shares of Apple trading higher by 0.8%. Amazon up now by 1.3%. Meta Platforms also higher by 1%. Stocks higher across the board. The Dow, the S&P, NASDAQ 100 index, all very much in the green. Right now, we've got the S&P up 42, up by 0.9%. The Dow up 264, up 0.7%. NASDAQ higher now by 1%. 10-year at 3.87% with a 2-year 4%. Gold up 0.8%, $20.56 the ounce. And a retreat today for West Texas. Intermediate crude down another 1.4%, back below $75 a barrel on WTI. Right now, $74.77 a barrel on WTI. Keeping an eye on Peloton Interactive shares. That stock moving lower now by 22%. The stock plunged after the company said it expects to record another sales decline in the current quarter. First day out for Immerse Sports. That is the parent of brands that include Wilson tennis rackets and Solomon ski boots. It went out at $13.40 a share. Right now we do have shares of Immerse at $13.47. Again, recapping, stocks higher. Going to be a busy day after the bell. Keep it locked into Bloomberg Radio and Television. Right now, S&P up by 0.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Gotta love it, a little IPO action on this Thursday. Speaking of action, we're going to get some big-time earnings action after the closing bell today. As we said earlier, on our minds is the mega cap tech earnings deluge. It continues. Apple, Amazon, Meta, Tim, reporting after the closing bell today.
You know what's nice, though?
What?
Apple doesn't come right after the bell. They kind of let everybody else go, and then they're like, pay attention to us. That's what's going to happen.
We're Apple. You can do that.
You'll wait for us. That's how it works.
We will indeed. Bloomberg News equities reporter Carmen Reinecke writes about it and writes about big tech's struggle to meet those lofty investor expectations this earnings season, which has really taken some of the air out of a record-breaking breaking stock run, I should say. So pressure is on the big three when they report today. Carmen joining us in studio. So Carmen, first of all, the week so far, we've had Microsoft, Alphabet, AMD all reported this week. They were met by selling. A lot of it had to do around AI expectations, right, and some of those lofty valuations.
Yeah, so what we're seeing is that even though these companies are coming to the table and they're talking about AI and they're saying, look, this is how it's helping our business, these are the ways in which we're using it, investors are really quick to punish these companies for not meeting these really lofty expectations. And part of that is because their valuations are just so high. So many of these companies are at all-time highs. They're trading at a premium to the NASDAQ 100. Obviously, you know, they led the rally in 2023. And so I think there's just so much under that investors are saying, okay, we really need to see not only proof of everything that's blowout earnings, and then we also need to see forward spin of like what's coming next for AI in the business. So expectations are really high. The thing that's interesting though also is, so we had the sell-off yesterday, but then today the NASDAQ is up. So I think what you also see is when there are these dips, yes, but these dips allow buyers to step back in because these are the stocks